This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
The fees that retailers had to pay to be able to enter the markets, the democratization of the markets by allowing them to have direct access to the markets over the last 10 to 20 years has really been, a key trend that has driven, I would say, the U.S. markets.
Good morning, everyone. Bloomberg Surveillance. Francine Lacroix in London. I'm Tom Kidd in New York. I've been watching Turkish lira. It's now in free fall. There's a lot of issues going on in Turkey and political with Greece and, some domestic issues as well. But 6.97, it's been an extraordinary weak morning for Turkish lira. Just want to bring that to your attention with futures negative 12. Beata Kerr is with Bernstein, co-head of investment strategy, and she is known for writing those kind of collegial notes you get, and then she'll put a killer statistic in the middle of it where you go, whoa. Here's one of them right now. U.S. stocks 30 years ago made up 30% of the Morgan Stanley index that everybody uses. They now make up 2/3. They've gone from 30% of the index up to 66% of the index. Beata, that is a brilliant, brilliant statistic. How did we get there?
Well, the U.S. market has continued to outperform for an extended period of time. We all know that over the last 10 years, the U.S. market in particular has been the winning market in the globe.
Yeah.
And, we look at that in terms of opportunity set, and broadly speaking, I think one of the things that we're thinking about today for investors, importantly, is maintaining a global perspective, right, with the recent dollar weakness that we've seen in particular.
But when is the win on this? I mean, people are waiting and waiting and waiting for international investment to persistently click in. How does that happen? What economically changes to make that happen?
Well, we're seeing examples of that over the course of the last month. When we look at how the U.S. has handled COVID compared to how developed international markets have handled COVID, and even parts of the emerging markets have handled COVID, importantly today, we know that Europe is emerging from the crisis more strongly than the U.S. is, right? We see that evidence in the last 30 days that there's been a retreat in consumer spending. There's been a response to some local spikes in the virus. And if we look at Europe in particular, you've got more cyclicality in industries, and you can see recent evidence in the PMIs of strengthening. So more exposure to cyclical sectors combined with dollar weakness, combined with managing COVID more aggressively. On top of that, we've seen a recent shift in investor positioning, and we think all of those factors combined are contributing to that shift. We're staying put as global investors. We have not made a substantial change in the recent past. But the point is that diversification is not dead. It has been a long time since international markets have outperformed U.S. markets. But we think those catalysts are in place, and we're pleased to see that evidence over the last 30 days in particular.
But Beata, when you look at Europe, I mean, the tests that we're going through with Spain now and the UK imposing a quarantine will actually show us whether, the second wave or this first wave is being dealt with correctly in the European economies. So, again, how difficult is it to see that ahead of time as an investor?
Well, look, it's no less difficult in Europe than it is in the U.S. And in the U.S., we obviously have 50 different states doing, 50 different things. And in Europe, you have a little bit more coordination, and we clearly had more aggressive virus management at the outset for a variety of reasons. The population and how they responded to the virus was quite different than what we see in the U.S. So look, this is an environment that has been challenging in that you're looking at not only corporate earnings, but you're looking at the path of a virus and policymaker response to the path of a virus. So from a forecasting standpoint, whether it's companies dropping earnings in the second half or it's economists providing projections, everybody's in the same boat in trying to understand the implications across policymakers, virology, and profitability. And that makes it an unusual environment for all to forecast.
Beata Kerr with us with Bernstein, and we will continue this discussion. Really, really interesting there on the changes that we see in the U.S. international mix. Coming up, this will be a lot of fun. Tobias Lefkovich with us from Citigroup. We're going to start strong with Tobias in the 8 o'clock hour. Tobias Lefkovich on the equity market, on the massive dominance of those 6, 7, 8 stocks. From London, from New York, this is Bloomberg.
Quand on voit la mort de George Floyd, on image la mort de mon petit frère Adama Traoré. Et la France va dénoncer tout de suite ce qui va se passer aux États-Unis. Nous, dans le combat vérité-justice pour Adama, vraiment dans le court terme, ce qu'on attend et ce qu'on exige surtout, c'est la mise en examen des gendarmes, la condamnation des gendarmes et d'un procès public. Aujourd'hui, on dénonce le déni de justice qui est en France depuis 4 ans. Jusqu'au bout, ça fait 4 ans que nous sommes là, nous n'avons pas peur. Ils ont les armes, nous sommes devenus des soldats malgré nous. Face à nous, c'est une machine de guerre qui n'a ni sentiment, ni état d'âme, ni remords. Oui, c'est un mouvement qui se prend, c'est le mouvement du comité Adama, de la nouvelle génération Adama. Aujourd'hui, moi je suis là, nous sommes là, on changera peut-être pas le monde du jour au lendemain, mais on changera des choses.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, we were having a good market conversation with Beata Kerr, Bernstein, co-head of investment strategy. Beata, when you look at bubbles or when you look at valuations that look expensive, what as an investor should you be aware of right now?
Yeah, thanks for asking that question. I think we're at a remarkable point in the markets today for a variety of reasons. The concentration in the U.S. rally is probably the leading reason, the leading fact to be aware of. Whether you look at the Russell growth or whether you look at the S&P, the concentration that we have in the top 5 stocks in these broad indices is pretty much every way we look at it unrivaled. And of course, we know that those stocks are tech companies who are doing extraordinarily well at this point in time. But the history of concentration like that does not bode well. It does not tend to last that way. And so that's something we're keeping a very close eye on. And we think it's important to remain balanced.
So what's a catalyst for a correction? What could happen that could actually, change the market's perspective?
Yeah, we've been thinking and debating that a lot, and we think there are a few catalysts. I mean, first of all, there is the potential for regulation. As you know, that's a very timely headline these days in terms of technology in particular, so we'll see what happens there. But we really do think there is potential for some impact from that. Second of all, we think it's a real question of the economic cycle. If interest rates move, if inflation comes back, if you start to see more cyclicals outperforming, they have troughed more aggressively. And as we were previously speaking, some global companies and especially exposure in Europe, you have more sensitivity to that cyclicality. And if that cyclicality opens up, there is that potential for reversal across sectors where you have more participation in securities that are more value-like than momentum-like. So we're watching those trends closely.
Beata, where interest rates are right now, do you just assume more M&A?
Look, we think M&A is very likely to continue. I think in many ways we have seen a pause in corporate activity during what we call, the Great Shutdown. But as we're in the middle of the great reopening, we're starting to see more business as usual as firms understand that we're going to be in this state, if you will, for an extended period of time. So there are incentives for M&A to continue in particular sectors. I would say in the financial services sector and asset management in particular, we would not be surprised to see ongoing M&A. And to your point, Tom, those low rates are further incentive for that.
All right, thank you so much for joining us, Beata Kerr there, Bernstein, co-head of investment strategy. Now, in the meantime, this is what stocks are doing here in Europe, racing again. Gold rally actually is cooling off. Now, it's now below 2,000. It did yesterday touch 2,000. Then we have a couple of earning companies that we need to watch out for here in Europe. Moncler disappointing, LVMH also disappointing after high-end, clothes makers' earnings missed analyst expectations despite good online presence. Now, be sure to tune into Bloomberg's 1-hour special Hong Kong on Edge 2. That's at 7 p.m. on Friday in New York. That's 12 a.m. on Saturday in London. It'll also be airing again through the weekend. The focus, of course, is on security law. The focus will be on trade between the U.S. and China and what happens next in this tit-for-tat. A couple of weeks ago, the UK actually suspended its extradition treaty with China, and Tom was reminding me that China did the same this morning with many countries part of the Commonwealth. This is Bloomberg.
Some things you see coming, some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
The Boston Symphony Orchestra presents BSO at Home, a collection of concerts, at-home lessons, and behind-the-scenes stories to enjoy while you stay at home. Learn more at bso.org/at-home.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
In the summer of 2020, there can be surprises. Suddenly, Turkey. It has been a stew of news over the last week or two. It has involved, of course, the emotion of prayers at the Grand Mosque. It has involved Greece and Turkey, which has been going on forever. And now you're beginning to see it with capital outflows and a change. We usually look at the Turkish lira as compared to dollar. But then there's the euro, and Euro Turkey, I should say, or Euro lira, has gone out to new record weakness. This is with the euro strength that we've seen, including against the dollar. Francine, that is a most distressing chart because of all the transactions done between the continent and with Turkey.
Yeah, and something, Tom, that I think as the days go by and the fact that it's just quite tough to defend the lira despite its dollar weakness will have repercussions for other things in Turkey as well. Now, the Moderna chief executive, Stéphane Bancel, says those who are most at risk in the U.S., the elderly and first responders, will receive the vaccine first if the FDA gives emergency approval to distribute while undergoing review. Speaking in an interview with Alex Steele and Guy Johnson, Bancel said the vaccine will initially be underpriced for its value during the coronavirus pandemic.
What we anticipate is you could have data, in the November timeframe. It is possible that we could have data in October. That is not the base plan. That is the best plan. And then when this happens, I think based on the data, the FDA could decide to give us emergency approval. And that will make the vaccine available in the US for people at our highest risk, the elderly, maybe healthcare workers, while the FDA reviews the file for approval for the general population. And so what we have been doing at Moderna, we raised $1.3 billion of capital in May to invest in raw materials, in equipment, hiring new team members and training them. And as we speak, we are making as many vaccines as we can with the goal of making 500 million doses, maybe up to 1 billion doses in 2021.
We just talk about how easy it's going to be to attract the necessary sort of demographics within the test. How easy is it going to be to attract those key demographics, the most vulnerable demographics, particularly seniors? Are you struggling in that area? Are people coming forward and wanting to take part in the test?
So it's a bit too early to know about the phase 3, given we just started this morning. But what I can tell you is over the last weeks, we've had thousands and thousands of people across the US asking us to come into the study. We've had people into the diverse groups, both elderly, African American, Latinos, and so on, which is very important for us. We want to make sure that the study has the right representation from the core demographics in the US that are at the highest risk.
This might be a silly question, but bear with me here. Is your vaccine an antibody vaccine? Is it a T cell? Like, how is it going to work as compared with some of the other vaccines out there?
Is a vaccine that is able to activate both B cell and T cells. So it's a bit complicated. The B cells provide, if you want, antibody, neutralizing antibody. And the T cells are used for memory. And what we've shown in the human study that was published in the New England Journal of Medicine 2 weeks ago is that we had a very high titer of neutralizing antibody, around 4 times more than people that are with convalescent sera, people that have been naturally infected. And we've also shown some CD4 T cells, which is a very good sign for the future efficacy of a vaccine. But at the end of the day, like everybody else, every other company, we have to run the phase 3 to really know the full efficacy of the vaccine.
We are, though, seeing other vaccines producing a T-cell response. Is this going to be one of the key differentiators, you think, as to whether or not we get a antibody and a cellular response? Is that going to be one of the kind of areas that we are going to, as people that are going to receive it, need to differentiate?
Yeah, I think people are very actively looking into those differentiation now because we don't have any more data. So everybody is trying, from industry, the scientific community, the regulators, to try to map out what do we know today from the phase 1 study for those that have run a phase 1 and published the data, and there are only a few companies, through the preclinical animal work, just to try to guess. But the real test that everybody is going to have to go through is to run, for the US, a 30,000 participant phase 3 study, 50% placebo control, you know, every other person getting the vaccine, every other person getting a placebo, and measuring the number of events and to really know, like this, the true efficacy of a vaccine. People are trying to guess now, but the phase 3 is going to be the real test for everybody.
Well, that was the Moderna chief executive, Stéphane Bancel, speaking to Alex and Guy a bit earlier to actually say, you know, how far along they are in this vaccine, and especially the pricing, Tom, because we often focusing on finding the vaccine. One of the then concerns, of course, how you make it work, how you distribute it, and how you pay for it. Now let's get straight to the Bloomberg. First word news in New York City is Ritika Gupta. Hi, Ritika.
Hi, Francine. Tom, Senate Majority Leader Mitch McConnell has to do more than battle Democrats over his new coronavirus relief proposal. A number of fellow Republicans also are opposed to the trillion-dollar measure. It calls for reducing those enhanced unemployment benefits and sending $1,200 checks to most Americans. House Speaker Nancy Pelosi calls the Republican plan pathetic. Still, she says she'll try to find common ground. It's likely to be a combative hearing when Attorney General William Barr testifies today before the Democratic-controlled House Judiciary Committee. In a prepared statement, Barr says the president has not tried to interfere in Justice Department business. He'll also argue that the president was the victim of wrongdoing by the Obama administration and by anti-Trump forces in the FBI. And it's an unusual restriction for a presidential campaign. Joe Biden's staff has been forbidden from trading individual stocks without approval from the campaign's general counsel. That's according to an email obtained by Bloomberg News. The policy is designed to prevent trading on non-public information. New York state health officials will investigate a Hamptons charity concert that was opened by Goldman Sachs CEO David Solomon. Solomon performed as a DJ. Governor Andrew Cuomo says he was appalled by what he called egregious social distancing violations seen in videos of the event. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Francine, this is an ancient tradition. I'm sure there's equivalencies in the United Kingdom, which is to have fun at a fancy place like the Hamptons and give it all to charity. And clearly in the Bloomberg reporting, that was what this event was doing to different charities that Mr. Solomon and others were supporting. But the issue is the video. I have not seen the video, Francine, but I guess it's really something where, you know, just within the excitement of all this, they were breaking a few rules, to say the least.
Yeah, so I saw the video, Tom, and I did, you know, read up on it when I came in this morning, and I think the idea was that you'd park the cars and stay next to your car, and
it didn't work
from
out.
The video, but I know there'll probably be an investigation. It didn't feel like that was what was being respected in terms of, you know, the layout that had been agreed beforehand.
Summer this year is so different everywhere across New York State, from the Hamptons out on Long Island out to Kathy Hochul's Buffalo, which is at the far end of the state. Kathy Hochul is the lieutenant governor. We have had the real joy of speaking to her almost on a weekly basis to see how New York has successfully moved on from this pandemic. The statistics are absolutely stunning, how New York State and New York City bent the curve. That's in the 7 o'clock hour. Futures at -9. Stay with us. Still hot in New York City. Good morning.
see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
This is Bloomberg Surveillance. Tom and Francine from London and New York. Now, as we continue to track the virus, Bloomberg has developed a unique partnership with the leading authority on COVID-19. Johns Hopkins has been at the forefront of the international response, and every day we bring you experts and subjects from public health and international affairs. Joining us now is Carla Freeman, Johns Hopkins Executive Director of Foreign Policy Institute and Associate Research Professor of China Studies. Carla, thank you for joining us. How difficult, actually, is it to track the virus and keep a handle on it? The UK government took everyone by surprise by saying that there would be a quarantine from travels returning back from Spain. This was on Saturday. No one was expecting it. I mean, does it suddenly flare up and countries have to put people in quarantine?
It's been really difficult to track, and I think that's the challenge. And we're looking around the world. If you look at Hong Kong, for example, which used to be ground zero for an excellent coronavirus response, relaxation on travelers coming into the city resulted in a surge in new cases. And so I think countries around the world, the UK among them, trying to prevent a second or third wave of the virus. But tracking is very difficult because so many people are asymptomatic.
Carla, what is so important here, and with your expertise on China, and for that matter, broader North Asia, they're taking the virus on in a very rules-based way. They make a rule and society has to do it or else. Now, in America, we don't do that. Do you feel things would be better here if we did it more like what the pandemic police are doing in Asia?
Well, I don't think that using coercive measures is a good idea as an American. I would prefer that people use sense, and it's very clear now that we understand the science a bit better that the virus can be mitigated by mask wearing. If everybody wears a mask, the spread of the virus is reduced. Yeah. It's been politicized in the United States, that is mask wearing, and so people aren't wearing masks, and you can see that all over the place. But places like New York, which have used strong enforcement measures, have seen very significant improvements to the situation and are able to manage the virus.
Francine, it is stunning, Francine. Much of this mathematics is from Johns Hopkins University. Francine, it is absolutely stunning the persistency of excellence of New York State over the last 60 or 70 days. I mean, it's just jaw-dropping, the differential between other states in America.
Yeah, Tom, but we have a great story about Lionel Laurent. The problem is that it could be 60 to 70 days like we saw in Spain, right? I mean, they got a handle on the virus and then people relax. So it's
exactly.
You know, like the model is very difficult, Tom, because you can be doing great and then actually not so great after a couple of months.
Carla, one of the news flow things we see today away from the virus is the extradition battle with China. We sort of decided, yeah, it's a big deal, but is it a big deal? I mean, the UK had an extradition agreement with China that's been broken, and now Canada and others. Is this a big deal?
Well, it is a big deal because it signals increasing problems between the Chinese and governments around the world with which who have very different political systems from China, and many of those, it's a list as you mentioned, the UK, Canada, and other democracies, including the United States, are weighing whether to sustain their extradition treaties with China in Hong Kong. It's a big deal too because it's been such a key way of managing many of the criminal networks that flow through that region. Suspending that or ending those agreements will have an impact on crime, but it's also part of the bigger political set of political tensions that's dividing increasingly the world between China and the United States.
Carla, there's talk about espionage and things like that, about research. If you look at the world over, who has the best research into this pandemic? Is it first movers advantage? Is it China?
China has some excellent research, and a lot of that was done in conjunction with international researchers. And China has a set of labs, many of which were working with international partners. There are numerous initiatives around the world, Korea, the United States, China, Europe, to develop a vaccine. And there's a lot of great science going on right now. So I think the United States is on the verge of perhaps rolling out a couple of potential vaccines. We've got some tests going on. We have excellent research in this area as well. I'm not sure whether it's better than China. They've done a lot of research, obviously, since the SARS epidemic of the early 2000s on coronaviruses. So they may have some of the best information on that. And in fact, the WHO is going to be sending a team to China to try to track the origins of the virus.
What are the chances that we'll never get a vaccine?
Well, that is a possibility. We're just learning more and more about this, and it looks like this is a highly mutable virus, and it may be difficult to develop a single vaccine for it. It may be more like the flu vaccine, but there are also other ways of treating this that may prove more effective than a vaccine. Lots of different paths potentially to manage this medically.
All right, thank you so much for joining us. Carla Freeman there of Johns Hopkins, and be sure to check out VRUS. Go on to Bloomberg for the latest information. You can also tune in every day for exclusive conversations with Johns Hopkins experts for an inside look at battling COVID-19. Now, coming up on Balance of Power, Max Baucus, the former U.S. ambassador to China. That's at 12 p.m. in New York, 5 p.m. in London. We are also getting some Pfizer news. Adjusted earnings per share coming in better than expected at 78 cents for Pfizer. This is for the second quarter. The estimate from analysts was 69 cents, and you can see pre-market, the share price is up. This is Bloomberg.
Opportunity knocks at the door. Don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with LACWA.
true diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Rishika Gupta. Let's get the Bloomberg Business Flash. A shake-up at Intel. The chipmaker has ousted its chief engineering officer less than a week after saying it had fallen behind in production technology. That disastrous announcement knocked more than $40 billion off Intel's market value, and it led analysts to question the future of its manufacturing organization. In Malaysia, a court has found former Prime Minister Najib Razak guilty in the first trial linked to the corruption scandal over state wealth fund 1MDB. The charges involved $10 million deposited in Najib's accounts by a former unit of the fund. He's been given 12 years in prison. The verdict came days after Goldman Sachs agreed on a $3.9 billion settlement for its role. In return, Malaysia dropped criminal charges. And the Trump administration stepped up its offensive against online companies that it accuses of censoring conservatives. It's asked regulators to dilute a law that social media giants such as Facebook and Twitter says is crucial to them. The law protects online companies from legal liability for users' posts. And that's your Bloomberg Business Flash. Francine?
Thank you so much, Ritika. Now, French automaker PSA Group is sticking to its financial outlook even after profit slumped in the first half of the year. Speaking exclusively to Bloomberg, the chief executive, Carlos Tavares, explained why he's optimistic about the second half of 2020.
What makes us confident is the fact that over the last 6 years, we have worked extremely hard to reduce the break-even point of our company. And as you know, our break-even point is now around 50% of our revenues. So we have become a very resilient company, very agile, and the numbers for the first half of 2020 just demonstrate this resilience, hence the fact that we have a very strong conviction that we will respect this all-weather floor guidance that is an average over 3 years, 2019, 2020, and 2021. So yes, it is an all-weather guidance, and yes, we will stick to it, as our results in H1 2020 demonstrate through the resilience of the PSA Group.
Yeah, you also talk about the fact that you're determined to achieve a solid rebound in the second half. How do you plan to do that if demand remains suppressed?
Well, during the lockdown, we had a very rigorous management of our inventories. As you can see through the numbers, we had a very significant reduction of our total inventory by around 24%, which means that we are entering H2 with a very low level of inventory. The new rebound of our manufacturing system is very smooth, very efficient. We see that the plants are coming back in a way which is very satisfactory from a cost perspective, of course, from a quality perspective. So in terms of manufacturing and supply chain, the rebound has been very smooth so far. The level of inventories entering H2 is very low, so we expect to be able to invoice a significant number of cars in this second half, of course, pending the fact that we would like the overall economy to be as stable as possible. But we see that the conditions for us seem quite promising.
Right. At the same time, Carlos, you're dependent on the European market, which is recovering very slowly and in large part due to incentive schemes in big markets like France and Germany. Are you in favor now of these incentive schemes?
No, we are not in favor of incentive schemes. We are not in favor of any initiative that would distort the market conditions. We would like just to make our customers happy directly with no distortion. But we, of course, enjoy, like our competitors, from those schemes. I would like to tell you that our order book is extremely good right now. By the end of H1, we were 15% up against last year. So our order book is stellar, given the attractiveness and the appeal of our new products, the Peugeots, the Citroëns, the DS, and the new Opels. And this is very rewarding experience. Our order book is very good. The inventories are very low. Conditions seem to be reasonably stable. And this is something that, of course, we can enjoy thanks to our supply chain that is now rebounding in a very effective way.
Well, that was Carlos Tavares, the chief executive of PSA Group, speaking exclusively to Bloomberg. Now, let's have a check, first of all, what Turkey lira is doing, but also what's going on with gold. We've been talking about gold for the last week or so. Now, the focus, of course, on gold is that it went up to 2,000, and now the rally seems to be fading somewhat. European stocks are racing gains, U.S. equity futures retreating. There was a bit of optimism that faded during the busiest week of earnings season. Now, gold dipped after this record-breaking rally, and I'm looking at Italian and French markets leading the declines in Europe, with LVMH, for example, and Moncler both dropping after the high-end luxury makers missed analyst expectations. Pfizer surging in the U.S. pre-market after boosting its earnings forecast, also saying it began a later-stage trial with a German partner for their top vaccine candidate. So look out for Pfizer pre-open. Coming up, join Tom Keene, Jonathan Ferrer, and Lisa Abramovitz for more Bloomberg Surveillance. That's coming up shortly on Bloomberg. It's also simulcast on radio, so you can follow that conversation. They'll be talking dollar dynamics, and of course, the stimulus in the U.S. Again, gold futures slipping from a record high of $2,000 an ounce. Silver also retreating. This is Bloomberg.
Everything around us, including the way we work and live, has been interrupted. Uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Other tools such as income tax would require a lot of time to prepare, because if you don't have the base, this will take time. So whatever we are thinking about, we think also about implementation and ease of implementation.
Don't like uncertainty, these binary risks which are impossible to hedge. With an equity market near its highs, I think buying some treasuries for safe haven make sense here?
I don't think we're going backwards. I just think we're slowing down and we're going to level off in terms of the recovery.
I would say, we're 6 months into this, another, say, a year and a half. I think we'll really start to pull ourselves out of it.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio, alongside Tom Keene with Lisa Abramowitz back in the building. I'm Jonathan Farrow. Tom Keene, negotiations begin in Washington, D.C.
Oh, they do. I mean, there we are last night. They sort of drive it forward, and we'll have much more today. And Kevin, I love one of the comments. I believe this from the senator from Kentucky. He called the Democratic proposal a multi-trillion-dollar socialist manifesto. I thought the British owned the phrase manifesto, John, but there it is in our stimulus in America.
It's going to be a mess down in Washington for the next couple of days, Tom. Republicans negotiating with themselves, simultaneously negotiating with Democrats. That's never the optimal way of doing things, Tom.
It's got to get to the end of July here, and Kevin Cirilli and we'll talk to him through the morning, but the calendar urgency here is extraordinary.
Well, as for the calendar, Lisa, as this week grows older, this week gets a whole lot busier.
Yeah, today not so much. We're heading into the Fed meeting today. Also, I'm watching at 10 a.m. We're going to be getting a consumer confidence data for July. Very interesting to see how much this has been affected by the increase in pandemic cases across the country. Also, what I'm watching, aftermarket, Starbucks and Visa reporting earnings. Just to give you a sense, 10% of S&P stocks report results today for the second quarter. Another 8% of the S&P due tomorrow, 12% on Thursday. So a big earnings week. And also today, as you guys were talking about, Chief of Staff Mark Meadows, Treasury Secretary Steve Mnuchin, and House Speaker Nancy Pelosi hashing out this stimulus. I'm really interested, John, in the mechanics of it. Shifting to the House the mandate to somehow take that $200 of additional stimulus that the Republicans are proposing and adding on a prorated aspect that they're going to calculate, given how antiquated their systems are that almost broke the first time. How is this going to work?
I'm interested in the price action right now. Cool, relaxed, calm. Look at equity futures this morning. We bounced off the lows. The S&P 500 down just 5 points, negative 0.15%. Tom, isn't that the story right now? Just look at the board. We've had this explosive move in gold. We settled down, we settled in at 1928. The bond market unmoved at 0.61%. The calm in the face of a total mess down in Washington, Tom, is pretty impressive.
John, I think you nailed it about settle to calm. That's what I felt yesterday on the tape. There are some flare points right now. We're seeing one in Turkey where there's a decidedly weaker Turkish lira, and that is through Euro Turkey to record weakness against the ever stronger euro. John, moments ago, McDonald's out, and to Lisa's point on consumer confidence, global same-store sales we're down something in the vicinity of 24%. McDonald's trades off right now.
More pain in that quarter to come in the U.S. GDP report later this week. Looking at the FX market, Tom, away from the Turkish lira, dollar yen, 105.18. Yeah. The breakdown in dollar yen continues. It is about yen strength. We finally break out of that range in the last few days, Tom, to the downside.
You nailed that in your morning note out on Twitter, John, to see it finally break down to yen strength. I went the other way and noticed that it was Mr. Kane's birthday with the tots.
We're really doing Harry Kane's birthday at 7:03.
With my morning note.
Did you notice I was in shock then? 7:03, Harry Kane's birthday. Tom Keene. Let's bring in David Leibovitz, shall we? JP Morgan Investment Management Global Market Strategist joins us right now. David, great to catch up with you, sir. Why the calm on Wall Street, given what's playing out down in Washington?
So I think that there's an implicit view amongst investors that something will get done. It'll probably happen at the 25th hour. It'll probably happen at the beginning of August and get retroactively applied to the end of July. But I think at the end of the day, neither party wants to be liable for a mini fiscal cliff given the state of the economy at the current juncture. And I think that that gives investors some confidence that a deal will get done sooner rather than later.
You know, I look where we are, David, and the mix here in the idea of planning and changing and adapting to the fall. What are you going to change, or what are you thinking about changing within your investment structure?
So there are a couple of things that have happened over the past few weeks that are making us a little bit more excited about opportunities on the value side of the equity market. You know, when you look at earnings season so far, the bar has been set way too low. You guys were talking about that euro strength earlier. That's translating into dollar weakness. And while there have been some issues reopening the economy, I think that the U.S. economy and the global economy is going to continue to grow in the back half of the year. And so you look at equity market concentration amongst the big growers. This is a positioning issue. It's not a fundamental issue, but I think you will see some investors begin to take some chips off the table. You're already seeing it in the futures data and embrace a little bit more of a cyclical value view, which is what we've been doing in portfolios.
The cyclical value view, another way of saying this perhaps is banks, and I know that you do like the banks here. Are you talking about U.S. banks, or are you saying go all in on European banks right now?
So we would continue to lean into the U.S. You know, these are for the most part large multinational institutions. They have exposure to an improving global economy. I think that the European bank story is still a little bit challenging just given the level of rates and given some of the structural issues that we see on the other side of the pond, but certainly more excited about financials in general than we were a couple of months ago, and getting more optimistic on the European banks, particularly if this coordination between monetary and fiscal policy really does gain momentum across the continent. You know, I think that could be a really pivotal moment for Europe going forward, and I think that over time their financial institutions will benefit.
David, we've talked for weeks now about allocating to Europe because things are getting better, that they've handled the reopening process in a more efficient way relative to the United States. Then Spain happened. Then the warnings came from the UK. The warnings came from Germany and France. Have we got a crack in that conviction this morning?
I think that what we need to do is take a step back and realize that it is very challenging to control the virus until we have some sort of medical solution, some sort of vaccine. I would point out that from a medical standpoint, we are much better at dealing with cases of COVID-19 when they do materialize. But to my mind, this was somewhat inevitable. I mean, as we've seen in the U.S., as you're seeing in parts of Asia, when you reopen the economy, case growth tends to resume because we don't have a medical way of dealing with the underlying issue. And so I think that it's obviously not good from a health standpoint, but I think that investors will look through it, focus more on the mortality rate and really the ability of the economy to remain open despite a backdrop of rising cases, much like we've seen here in the U.S.
And Tom, isn't that the story? This stop-start economy worldwide, nobody's immune to it. Nobody at all. It doesn't matter how you reopen. At some point, you have to stop, then start again, stop, then start again.
And we're seeing it at the corporate level. I mean, David, I think it is critical that Minnesota Mining and Manufacturing comes out with whatever it was, 8%, whatever, marked down in organic revenue growth. And now we've got McDonald's, obviously retail, and there's a whole issue there with restaurants. But how do you jumpstart confidence in revenue until you get the stability from the stop-start that John Farrow's talking about?
You know, I think that is the key issue, and that's why, circling back to where we started the conversation, you know, fiscal policy supports remain essential to the economy smoothly coming back online, or coming back online as smoothly as possible, because until people feel confident in their ability to go out and go back to their day-to-day, resume some sort of normalcy, there are going to be limits to how much revenues can grow. You know, expectations, as I mentioned, on the earnings front and the revenue front were too low this quarter. I think that's because you're still not seeing companies really provide any sort of material guidance. But when it comes to getting that revenue growth back on par with where, you know, it was at the beginning of 2020 and the end of 2019, I think that you're just going to need to see people more confident in the idea that there's some sort of solution if they do in fact get sick.
David, if you do believe in the fiscal element here and you do believe that it is forthcoming imminently, do you also believe that you are throwing your money away essentially by going into 10-year Treasury yields, given the fact that you're essentially losing money based on a real yield basis?
So I think that, you know, the conversation around portfolio construction and asset allocation has really changed here, because treasuries do still provide a good hedge relative to the equity market. The problem is you're no longer getting paid to hold that hedge. You are now paying to hold that hedge. And I think when we talk to particularly our larger clients about the way they're allocating portfolios, you know, they're increasingly thinking about things like core real assets, infrastructure, real estate, both on the private side, as ways of generating income without adding equity volatility to their portfolio. So it's challenging to get too excited about owning duration here, but there really is no better hedge relative to equities in our view.
David, I caught up with Bank of America yesterday, and they said to me it's the end of the 60-40 portfolio. They've been saying it for a while. What do you do with the 40 now?
So I think that you take some of that credit exposure and, again, redeploy it in alternative investments if you're able, or at least think about a broader array of investment strategies, even for investors who focus on traditional liquid, the more traditional liquid side of the equation, option-based equity strategies, commodity strategies. There are ways of further diversifying your portfolio and protecting against some of these risks that we see on the horizon, whether it be equity market volatility, whether it be inflation. But, the idea that you can own 60% S&P 500 and 40% Barclays Ag and generate sufficient returns is just not realistic in the current environment.
David, I love what you've done with your house. I know that's not a Pharaoh and ball color behind you. That is the Williams College purple. I can tell that from here.
Yes.
Great
Thank
decorating
you.
job, David. John?
David, thank you. Thank you. I didn't think I'd have to say thank you for your patience this early in the morning, but I am.
Come on, Williams
First
College
guest of the
purple.
morning.
There it is.
Thanks for your patience, David. David Leibovitz.
Thanks,
of
guys.
JP Morgan. Doug Cass said to us yesterday that whenever Tom brings up soccer nonsense with me, it means he doesn't want to talk about the Red Sox.
Got that right.
Overnight, a certain Mohamed Al-Arian dropped us a quick email, and all it said at the top in the subject column was post-game alert for the Mets. Did the Red Sox really lose to the Mets yesterday, Tom? What on earth is going on with your baseball team?
It was the edge of 1986. I expect Lenny Dykstra to come back and launch the ball over the monster like he did against Oil Can Boyd.
Season over.
Yeah, but we knew that a week ago.
Lisa Abramovich back in the building with us. Very happy to say that is the case. Looking at the price action this morning, equities bouncing off the bottom. Equity futures right now down 0.2%, negative just 6 points. What a week we've got coming up for you. A Fed decision tomorrow. That meeting begins today. Tech hearings tomorrow alongside tech earnings on Thursday. US GDP in the mix. That is one for the economic historians, that's for sure. Is it one for the market? We'll debate that in the next couple of days. Yields lower by a single basis point at 0.61%. Euro dollar on a mission over the last week. It settles down at 117.42. The dollar snapping back just a little bit in today's session. That brings gold lower by 0.6%. Spot gold, 19.30. On New York's economy, on reopening, looking forward to the conversation later with New York Lieutenant Governor Kathy Hochul. Up next on the program, we'll take you down to Washington, D.C. for the mess that is emerging in the fiscal debate. From New York City this morning, good morning. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. The battle is on over what the next coronavirus stimulus relief bill will look like. Senate Majority Leader Mitch McConnell unveiled the Republican proposal. House Speaker Nancy Pelosi called it pathetic, but says she'll try to find some common ground. The plan would reduce extra unemployment benefits and sell $1,200 payments to most Americans. The coronavirus is reaching a plateau in some of the hardest hit U.S. states. That's after health officials imposed unpopular measures like closing bars and requiring masks. Florida reported its fewest new cases in almost 3 weeks. Texas had its lowest total in 2 weeks. Now states wonder whether they can keep infection rates down until a vaccine arrives. China is buying American imports, but not enough to hit the terms of the two nations trade deal. That's according to Bloomberg calculations based on Chinese customs agency data. In the first half of the year, China had bought about 23% of the total purchase target for 2020. Purchases of farm products have stepped up the last 2 months. The European Central Bank has asked that banks hold off on dividends or share buybacks at least until January. That's a blow to lenders who wanted to return to business as usual. The ECB also asked banks to show moderation when it comes to time to hand out bonuses. Nissan has issued an outlook for a bigger than expected loss for the fiscal year. The Japanese automaker expects to post $4.5 billion in operating losses. It also plans to skip its dividend. The impact from the coronavirus pandemic has forced Nissan to speed up cost cuts. Global News 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
We have 1 foot in the pandemic and 1 foot in the recovery. The American people need more help. They need it to be comprehensive, and they need it to be carefully tailored to this crossroads.
Senate Majority Leader Mitch McConnell there down in Washington, D.C. in the last 24 hours. The negotiations begin right now with his own party and with the Democrats as well. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Here's your price action this Tuesday morning. Good morning to you all. Equity futures down 11 on the S&P. We're off by 1/3%. Euro dollar backtracking just a little bit, clicking into reverse on the euro at 117.38. Down a single point on the Treasury yield by a single basis point to 0.61%. And in the gold market, just an explosive move through the 2011 record. We're back down a little bit, off by 0.75% at 19.27. Negotiations down in Washington, Tom Keene, are going to be so difficult. This comes from Senator Ted Cruz speaking to reporters yesterday. There is significant resistance to yet another $1 trillion. As it stands now, I think it's likely that you'll see a number of Republicans in opposition to this bill and expressing serious concerns.
Let's move the conversation forward, John, right now. Kevin Cirilli, our chief Washington correspondent. Kevin, what happens this morning?
Well, right now, it's essentially, or today rather, in the next couple of days, Republicans and Democrats are going to be meeting behind closed doors in order to hammer out some type of deal. Look, if you're outside of Washington, you've got the right saying that this is the best they can offer, the left saying it's dead on arrival, but really this is going according to plan in the sense that this is the timetable. So you've got unemployment benefits expiring on Friday. There's going to be a lot of political theater, but yesterday was the opening bid, and now it's time to negotiate.
What happens at the table in the room? What actually happens? Do they split it down the middle?
I think in terms of where the money goes, especially when you've got now Republicans saying that they are for $100 billion in education funding. That's something that, quite honestly, up until the pandemic, would have made many conservatives balk at that type of number. But this is the reality that they find themselves in. Also, yesterday I spoke with Congressman Max Rose. He is a Democrat from New York, representing New York's 11th district. And what he had to say was, essentially, there is a contingency of Democrats who would be in favor of some tax relief for businesses, provided that those businesses continue to keep employees on their payroll through the end of the year. So that issue that we've been covering for quite some time now, really gaining some steam, that businesses could get some tax relief if, and only if, they assure Washington that they're not going to have mass layoffs at the end of the year.
Kevin, it's embarrassing to think we're going to get to the end of the week and this expires without a replacement, and we've got to wait until next week. It is utterly embarrassing it has taken this long to even begin negotiations. Surely Speaker Pelosi is now in a position where she has to introduce an interim bill and push something forward to make a bridge or something to help the people that face the expiry at the end of this week.
And precisely, and from the political angle, purely from the political anger, Speaker Pelosi has to funnel that anger from the far left flank of her party. And let's not forget that progressives like Congresswoman Alexandria Ocasio-Cortez really are seizing on this moment as a way to really define the future of not just the Democratic Party, but how business is conducted in Washington for progressives as a whole. The backdrop, meanwhile, is the Biden campaign continuing to unveil some of their economic agenda. So two very different tracks emerging for the Democratic Party right now. One, the presumptive Democratic nominee unveiling these types of economic proposals, but meanwhile, a new contingency of progressive lawmakers who are saying, hey, we're the ones who are going to be negotiating with Republicans in the long term.
Kevin, just focus on the here and now, the expiry that John was talking about at the end of the week of the $600 of enhanced jobless benefits. Republicans are talking about bringing that down to $200 and then have states supplement up to 70% of pre-existing wages. How realistic is it that the states will physically be able to do that given the mechanics of their systems?
It's going to be incredibly difficult. And I think even the mechanics of the system, you know, when I spoke with people, Lisa, at the Labor Department over the past couple of weeks, what they've said is the computer systems, just from a practical matter, the computer systems have had a hard time keeping up with all the people filing for unemployment. But from a political matter, yesterday I spoke with a senior Republican consultant who said that up to 20, get this, 20 Republican senators right now are on the fence about even supporting this. They feel that it's
Kevin,
too much money.
They're on the fence. You sound like a guy in the Beltway. Okay, there's 20% unemployment. Maybe it's going to be a 12% or 10% 4 months from now. McDonald's just cratered same-store sales. 3M just cratered organic revenue growth. You know, Mike Allen wrote about this with Axios an hour ago. Do these guys understand there's a whole world out there going under?
From those conservatives who are raising these concerns, the Ted Cruzes, the Rand Pauls of the world, they're looking at their constituents, they're looking at their states, and this is the reality of the political moment that we find ourselves in America, is that the reality, the economic reality of New York City and Los Angeles is incredibly different than the agricultural sector in Rand Paul's Kentucky.
Kevin, who are the key Republicans to watch right now? Senator Graham said that other Republicans will say no. Senator Cruz said that other Republicans will say no. They didn't confirm whether they would be saying no. Who do we need to watch for?
John Thune. I think Senator John Thune, who is a member of Mitch McConnell, Leader McConnell's operation up in the Senate, I think is someone who is playing an incredibly long game here. He is someone who is a deeply conservative on economic principles, but also someone who is seen as a bridge, Jonathan, for the various contingencies like the Rand Paul contingency as well as the Mitt Romney contingency. And a word on Senator Romney, who has legislation in McConnell's bill that is bipartisan that would allow for Democrats and Republicans to look in the long term about ways to continue to solve some of the small business problems, to allow for there to be some micro-targeting to small businesses and medium-sized businesses over the long term. So a transpartisan mechanism tucked into Leader McConnell's bill.
Kevin, thank you. Busy day for you, sir. Kevin's already down in Washington, our chief Washington correspondent. Tom Keene, the good news, at least they're talking later this afternoon. There was a real fear that House Speaker Nancy Pelosi might just come out and say, back to you. Agree with yourselves before you negotiate with us.
The body language is sort of back to you. I would point out that Mr. Thune is from South Dakota, John, where he took just over 71% of the vote the last time he was up for election. I mean, the skewedness of the Senate here versus the House, and the challenges, frankly, that Mr. Biden and Mr. Trump have is just remarkable. And to your wonderful question, John, who do we watch? I think that's the key question.
Tom, it was never going to be easy. It was always going to be difficult. I think what's disappointing about this is that Republicans waited so long to actually unveil something so the negotiations could start. To push the start of these negotiations right up against the expiry, It might be good politics in some people's minds. It's bad for this economy.
I mean, Lisa, help me out here. I don't buy the idea that New York City is that much different from Little Rock, Arkansas.
Well, it's getting more similar.
In their own ways, they're getting hammered.
Well, that's the thing. It's getting more similar. In Florida, for example, that was benefiting, now struggling with tourists just not coming in the summer season.
Equity futures down 11. We're off by 1/3%. Coming up on this program, former Philadelphia Fed President Charles Plosser. I don't think there's a Plosser on the Fed right now. We'll talk about that very shortly from New York. This is Bloomberg.
David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
A massive week coming up for financial markets worldwide. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. This It's Bloomberg Surveillance live on Bloomberg TV and radio. Here's the price action. 2 hours out from the opening bell. Just a faint scent of risk aversion this morning. Futures down 13, off by 0.4%. The single currency a little weaker, the euro against the dollar. Euro dollar down to 117.38, down about 0.1% as the dollar strengthens against most of G10 with the exception of the Swissy and the Japanese yen. Gold on the back foot a little bit, down 0.5%. And yields in, Tom, a single basis point on a 10-year at 0.61% as the two-day FOMC meeting commences down in Washington.
As you mentioned, John, a busy back of the week. The Fed meeting tomorrow. Look for our Fed Decides coverage with Caroline Hyde. And then we move on to Thursday, tech earnings, and of course that jobless claims statistic. Right now, a delicate conversation. When you are a member of the Federal Reserve System, as Charles Plosser was at the Philadelphia Fed, you are delicate even in retirement about the Fed. We asked Dr. Plosser now not to be delicate. Charles Plosser, you invented real business cycle theory. Kidlin and Prescott got the Nobel Prize, but you and Long came up with the phrase and came up with the theory. There is now a raging debate in your racket over the theoretical qualifications of Ms. Shelton to join the Fed as a governor. Your theory's been criticized, been preached. You got a Nobel Prize out of it with Kinlan and Prescott. Does Judy Shelton have a theory?
Oh, gee, Tom. I don't know. I think obviously she is very popular in some circles, not so popular in others. But you know, I have to say that during the course of history, the Board of Governors has had many people of many different stripes and perspectives on economics and macroeconomics. So I think that if you think Judy Shelton is a great economist, going to be a great Fed governor, then that's fine. If you think that's not the case, then my guess is she will have relatively little impact overall on the way policies proceed. So, yeah, I think debate's not a bad thing. So I tend to be a little more open-minded about the willingness of the institution to respond to these sorts of episodes. So she wouldn't have been my first pick, but I'm not sure the consequences are terribly serious one way or another.
Dr. Plosser, the real business cycle theory always is at a theory of exogenous shocks. You've been given your exogenous shock with a deficit. What will these $1 trillion of deficits do to our financial system, and is there a certitude that we will see inflation?
Well, there's never a certitude about anything in the future. But I do think that we've had a very serious shock to the system, partly due to the shutdown and the coronavirus. And I think that the large deficits will have their own set of consequences. We were already in a situation where fiscal policy that was being conducted in this country was not sustainable. And this is just going to make matters even more challenging. So I think there's a real problem. We've got a real problem. I think that, and my real problem is not just the fiscal policy, but how the Fed responds to that fiscal policy and the pressures they're going to be under to engage in off-budget fiscal policy and supporting fiscal policy in ways that may be detrimental for the Fed and for the economy as a whole.
What would be the best way for the Fed to execute a lessening of the balance sheet?
Well, I think there are a variety of views on that. My preference would be to let them just continue to run this thing off, to stop increasing the balance sheet. It seems like they increased the balance sheet a lot in the financial crisis. They promised exit, and it never happened. And now it's 50% bigger than it was after the great crisis, the financial crisis. So I'm not sure where this is going, and I think they need to declare their independence and regain control of monetary policy that's independent of the fiscal pressures that they're going to be under.
Charles, it used to be the Charlie Plosser, Richard Fisher 1-2 punch. They just don't make them like you guys anymore on the FOMC. Do you think we are suffering from groupthink at the Federal Reserve?
Well, there's always a bit of that in any institution. and I am worried that there's not enough pushback on things. I mean, we argued back in 2009, 10, and 11 the problems that we were going to get into with QE and the dangers of the large balance sheet and the risk of it being abused by the fiscal authorities and the difficulty we were going to face in getting out of it. And nobody wanted to listen then, and now we're back in the same boat, except it's bigger and the risks are greater. And so I think that it would be wise upon the Fed, particularly now, to be more articulate about what the exit ramp looks like from all this and how they're going to get out from under it. And the abuse of the Fed for fiscal policy purposes is even larger now than it was then. And I'm afraid that, you know, it's not looking good. And I'm concerned the Fed doesn't push back enough.
Charlie, I'm interested in this word abuse, because the Federal Reserve, a lot of people would consider they are enabling this deliberately. This is an objective to work with the Treasury, to work with fiscal authorities, and not just the Fed, but globally. And many economists, Charlie, considering that the optimal way of conducting policy right now. This word abuse, these words, these phrases, this isn't good. Charlie, why is it not good? Can you communicate that really clearly?
It's not good because the Fed was granted independence in order to be able to conduct policy for the long run and to conduct policy independent of partisan politics. And what we see now is when you lose that independence, when you become more susceptible to politicization, then the Fed's decisions will no longer necessarily be about the best interest of the economy, but whoever happens to have political power, either in Congress or the administration.
Charlie, are we already there when it comes to asset price inflation? You've got Fed officials that have been pretty sanguine about that.
I'm worried that the Fed is enabling this, maybe not intentionally, but indirectly they are enabling the ability of this to go on and encouraging expectations from the marketplace and other parts of the economy that the Fed is the rescuer, not just of last resort, but of first resort. And Congress has used the Fed's balance sheet to fund the transportation bill in 2015. They used it during this crisis to have the Fed do the lending on behalf of the Treasury instead of having the Treasury do it. They have, they funded the Consumer Finance Protection Agency out of the Fed's budget, but with no authority by the Fed. So there are examples of how the fiscal authorities are abusing the Fed's balance sheet, and the Fed has allowed this to happen without much pushback. Their operating regime of this large balance sheet and their unwillingness to shrink it, and the expectations they've set up with the financial markets of backing failures and volatility is all part of the play here to as part of the actions that are supporting and encouraging this lack of independence.
Charlie,
and I think that's very dangerous.
From a philosophical perspective, people talk about the dangers of a Fed or a central bank not being politically independent. From an economic perspective, what are the negative consequences from the fact that the Fed has taken the actions that it has, to your view, perhaps too much in tandem with the Treasury Department and the U.S. administration?
What are the dangers? The dangers are losing control of both inflation and political independence. I mean, look the history of central banking and politics is not a pretty one. And that those countries where central banks have become arms of the political or administrative authorities and used to substitute for sound fiscal policies and encourage money creation is the history's terrible. I mean, the empirical evidence is just wrought with hyperinflation, like in Zimbabwe or Germany. You can just go down the list. Argentina. I mean, you can just go down the list and see what happens when the central banks become pawns of the political authorities.
But Charles, we did not see that. Let's be clear here that coming out of the crisis, many looked for higher inflation and it didn't occur. Did it just go over on the balance sheet side to assets? Did we just simply move the dynamics of price over to asset inflation?
Well, perhaps, but really what happened was when the Fed people said the Fed printed money, but mostly what it did was put reserves in the banking system that sat there. Part of the problem and the puzzle, I think, and one of the things that I think is problematic for the future, is that money supply growth, money in circulation after the great financial crisis, all that stuff the Fed printed sat in the banks. It didn't circulate very much. So there was no big increase in the money supply. I think that's an interesting puzzle. It may have to do with interest on reserves and other things. The Fed hasn't answered this question yet, but if you look at what's happened in the last 3 months, unlike the great financial crisis when the Fed blew up its balance sheet, in this episode, there's been a huge increase in money. I don't know whether it's going to lead to a different outcome or not. It kind of depends on what the Fed does, but I think that that's part of the puzzle and part of the thing that the Fed's hasn't really addressed in its review of what their new strategy is going to be. I mean, they tried, after much criticism, they've tried to get inflation up to 2%, or claim they were. There's zero interest rates for, 7 years almost? And inflation didn't rise. So now they're talking about a new strategy where they're going to plan on overshooting inflation. Well, I mean, they haven't even been able to get it to 2% with zero interest rates for 7 years. So what's wrong? That's the elephant in the room here that the Fed needs to address, not some refined view of inflation averaging versus inflation targeting or whatever. I think they need a more fundamental think about what their policies, maybe it's like I said, the interest on reserves or a large balance sheet, all those things impact how monetary policy works.
Hey, Charlie, I know one thing for sure.
Gripping with that.
Chairman Powell's happy you're not on the FOMC today as that meeting begins. Charles, we got to leave it there. It's fantastic to catch up with you, sir. Always fortunate to speak to you. Charles Plosser there, the former Philadelphia Fed president. Tom Keene, can you imagine this FOMC with Charles Plosser around a table, virtually speaking, of course, alongside Richard Fisher? Very different conversation to the one that's going to play out over the next 24 hours.
Absolutely. It's somewhat generational. I mean, we mentioned Judy Shelton there, and of course, there's my memory for those a bit older of Wayne Angel and others. There has been controversy at the Fed, and everyone, and particularly those, John, working at the Bank of England, would say that's really good. To have that debate at the Fed is really important, whether Adam Posen goes over to Bank of England, whoever.
The two-day meeting begins down in Washington, D.C. The week really ramping up as the week grows older. Coming up on the program, New York Lieutenant Governor Kathy Hochul from New York City this morning. Good morning. This is Bloomberg.
With the First Word News, I'm Rishka Gupta. Senate Majority Leader Mitch McConnell has to do more than battle Democrats over his new coronavirus relief proposal. A number of fellow Republicans also are opposed to the $1 trillion measure. He calls for reducing those enhanced unemployment benefits and sending $1,200 checks to most Americans. House Speaker Nancy Pelosi calls the Republican plan pathetic. Still, she says she'll try to find common ground. It's likely to be a combative hearing when Attorney General William Barr testifies today before the Democratic-controlled House Judiciary Committee. In a prepared statement, Barr says the president has not tried to interfere in Justice Department business. He'll also argue that the president was the victim of wrongdoing by the Obama administration and by anti-Trump forces in the FBI. President Donald Trump is paying a game of defense in areas a Republican incumbent should be able to count on. He's spending nearly all of his advertising money to keep states he won in 2016. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg.
opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with LACWA.
You see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
We're always looking, and we look at things through the lens of value. And we have to see a good portfolio fit, and so there are strategic screens that we look at for any transaction. We've got a pretty high bar.
A fiscal tsunami, a once-in-a-100-year fiscal tsunami, which has left our infrastructure intact but demolished 40% of our revenues. We exhausted on Friday the last of the CARES dollars that we got several months ago.
Pat Foy, MTA chairman and CEO. Everybody seemingly looking down to Washington, D.C. for the next move. From New York City this morning, good morning. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Here's your price action as we count you down towards the opening bell in New York. Just a little bit softer, weaker, a defensive posture. With a different smell to yesterday, equity futures down 0.4%, the euro negative, a third of 1%, euro dollar 117.12. Yields in a single basis point, 0.61%. And after that huge move in the gold price, Tom, spot gold back to 1,930. We're back down about 0.6%. No drama after an explosive rally through much of this year.
Yeah, absolutely. One of the quieter tapes today, I would note I'm looking at Turkish lira right now out to new weakness and particularly record weakness on Euro Turkey this morning. Right now, a serious conversation, but we must digress at the top with the Lieutenant Governor of the Empire State. Kathy Hochul is a pride of Buffalo, and she knows quite well that nothing really matters except for the movie The Natural. The Natural was filmed in Buffalo. It was a hugely important and emotional vision of old baseball parks, and then Buffalo went on to build the jewel of minor league baseball, Pilot Field, which is now where the Toronto Blue Jays will play. Bloomberg Surveillance has, of course, sent a note to Toronto saying, you've got to be kidding me. Hochul has to throw out the first pitch. Lieutenant Governor, will you throw out the first pitch for the Toronto Blue Jays?
Oh, if asked, I will serve, and I'll get out there, start practicing every bit. I've been known for even single A teams to stand along the New York State Thruway practicing, so I just don't embarrass my state and my family. So I'm not good at it, but I take it very seriously. I watch videos of other first pitches, and I just don't want to bring any
Oh, stop. So you're being political. You don't want to do a Fauci. Let's leave it at that. Too many...
No.
You don't want to do...
any other talent.
Yeah, you don't want to do a Fauci. I get it. Look, we don't have enough time here, and there's so many serious issues. You're going to get $100 billion of school aid from the Republican stimulus. Is that enough?
What a joke. I mean, seriously. When you see the Republicans now have this crisis in their own states. I mean, a couple months ago, they were saying, and I'm not making this up, Mitch McConnell said there'll be no blue state bailouts. And that's when it was New York and New Jersey and Connecticut and California. Well, today, because no one followed the playbook that Governor Cuomo handed them on how to manage a pandemic, we have a crisis in the red states, Florida, Arizona, Texas, et cetera. So to think that that's going to be enough money for the rest of the country, and New York State in particular, it's paltry, it's an embarrassment, and there's no way that schools can open safely if we don't get more assistance from the federal government. Don't even be talking about a $1 trillion plan. That's how much should be going to the state and local governments, period, for getting everything else. I mean, that's the baseline just for state and local in order for us to make up for $14 billion in lost revenue, $5 billion in additional expenses, which continue to climb every day. So don't embarrass yourselves, Washington. Get your act together. And if the Senate Republicans can't get their unity in their caucus, then turn it over to Chuck Schumer, who'll get the job done.
Lieutenant Governor, a lot of economists agree with you that the states very much need a pretty big fiscal bailout or some sort of fiscal support. There is a question, though, about what the states can be doing with respect to luring back businesses once the pandemic is over. Midtown is a ghost town. People are leaving the state. People are leaving the city. What economic plans do you have, or are you talking about, to try to bring businesses and residents back?
Lisa, you hit right on it. I mean, normally the state of New York is very generous in terms of incentivizing businesses from Buffalo to Manhattan. And we understand that that's part of our job is an opportunity for businesses to thrive and create jobs. That's the bottom line, get people back to work. If we do not get that assistance from the state, from the federal government, how are we going to continue funding the economic development plans that I oversee as chair of the Regional Economic Development Council?
Lieutenant Governor,
we need that money. We have to do it.
I don't mean to interrupt, but as you well know, there's 12 Republicans upstate in New York who are fighting for their political life. Are Republicans and Democrats in New York State on the same page, or frankly in Arkansas, are they on the same page as saying to the elites in Washington, wake up? I just don't see the calendar immediacy in Washington.
Yeah, I don't know what planet they're living on, Tom. I really don't. Have they not been seeing the overcrowding in hospitals and people in other states just searching for the PPE that we had to go through? Don't they understand that?
What's the unemployment rate in Buffalo right now? I don't have a clue. What's the unemployment rate in your Buffalo?
I will tell you, statewide, it's 16%. Buffalo, it's probably closer to 20%. And for them to say that they're going to cut unemployment insurance, I'm sorry, a year ago in New York State, we had a 4% unemployment rate. Great success of the Cuomo administration, 4%. People were working. They're assuming that people want to now stay home, people that are just being lazy and they don't want to get back to work because they can collect $600 a week. They can't get back to work because the hotels are not open. There's no jobs for them. They want to get back to work.
And then
don't be so callous.
Okay, down the thruway to the late, great Barbara B. Conable. Great. He wanted fiscal prudence around the federal government. What's the certitude for conservatives that we're going to pay back all this debt down the road?
Our economy will come back, and it will come back roaring if we can get the assistance from the federal government to get us through a 100-year pandemic. This is not something we ask for on a regular basis, even though we do know that New York State sends about $30 billion more to Washington annually compared to what we get back. And you look at a state like Kentucky, that's a taker. We're a giver. So we're not even trying to settle that score. We're just saying, can you help us out, federal government, like other national governments around the planet? They don't leave the individual provinces of different countries to fend for themselves. Don't do that to your states. We need a federal response. We've needed since the beginning. And heaven help us if you're not figuring out a federal response to getting this vaccine out there once it's developed. We have to make sure that they're developing that now. Make sure it's going to be available for everybody. Invoke the Defense Production Act. Don't leave it up to every individual company to try and go to the market and commercialize it. This needs to be a federal government response, or else we'll never get our economy back.
Kathy, 45 seconds. Forgive me for keeping this one tight. If you don't get the aid you want, how quickly does the state-level austerity begin in New York?
Oh, almost immediately. We are counting on this. We need that money now to give to our schools so they can have the PPE and the disinfecting and rent additional space or whatever they need to do just to get our kids back to school. And guess what? If our kids don't get back to school, the economy doesn't go back because who's watching the kids when the parents go to work? And this always falls on the shoulders of women Senator Gillibrand and I toured the state for the last couple of days, going to cities large and small, talking about a child care crisis that is going to hold back our recovery, and federal dollars can assist with that. Well, it's going to start hurting almost immediately.
Lieutenant Governor, appreciate your time. Please come back soon. Lieutenant Governor of New York there, Kathy Hochul. Tom, that is the story for these states. If they don't get the aid, the austerity begins almost immediately, and austerity in this economy is the last thing you want.
And what's so important here, folks, is I'm getting emails in off the Bloomberg terminal from conservatives saying, no, they don't support the thoughts of the Democrat from New York. I mean, this is a raging battle between the elites and everyone else, John.
Coming up on this program, more on the equity market. Doing okay, down 12 on the S&P 500. Up next, Tobias Lefkovich, Citigroup Chief, U.S. equity strategist from New York City this morning. Good morning. This is Bloomberg.
He said that the idea that China is our competition is really bizarre. Well, watch what happened. Not a good situation. Their freedom's been taken away, their rights have been taken away, and with it goes Hong Kong, in my opinion, because it will no longer be able to compete with free markets. A lot of people will be leaving Hong Kong, I suspect. And we're going to do a lot more business because of it, because we just lost one competitor. You'll see more coming. This was a very important bill that we signed, but you're going to see more coming over the next short period of time. But we can impose massive tariffs on China if we want, and other countries if we want. And we'll see. We just want to be treated fairly. Tremendous amounts of our energy No administration has been tougher on China than this administration. We imposed historic tariffs. We stood up to China's intellectual property theft at a level that nobody's ever come close. We confronted untrustworthy Chinese technology and telecom providers.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial information partner. The Bloomberg Commodity Index. True diversification.
markets don't like uncertainty, these binary risks which are impossible to hedge, with an equity market near its highs, I think buying some treasuries for safe haven makes sense here.
I don't think we're going backwards. I just think we're slowing down and we're going to level off in terms of the recovery.
I would say, we're 6 months into this, another, say, a year and a half. I think we'll really start to pull ourselves out of it.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. What an interesting Tuesday. On the way to a Fed meeting tomorrow, we'll have our Fed coverage as usual. Caroline Hyde leading that, and then on to an exceptionally busy end of the week. And John Farrow, there's no question about it. You wonder where this stimulus debate will be in Washington by the end of the week and into the Sunday talk shows.
It gets messier before it gets fixed, that's for sure, Tom. 98 days until the election. You would think Washington, D.C. would get it together. It hasn't. And just as the economy starts to roll over, as that recovery starts to plateau, the collective will to do a whole lot more fades, Tom. That's the story, and it's always the story. When you exit the immediate crisis, the collective will fades, and we're seeing it fade in Washington.
Well, Lawrence Kudlow, I think, out on NPR, John, still talking about a V-shaped recovery. I'm looking at a Minnesota mining recovery, a McDonald's recovery. Kathy Hochul talking about 14, 16, 20% unemployment in her Buffalo. Where's the recovery,
Tom,
John?
you get a snap back in Q2, Q3. Q2 out to Q3, there's your V. And then after that, you roll over. And that's what everyone expected, Tom, even with the messy reopening down across the Sun Belt. Everyone expected that mechanical lift as you go from shutdown to reopen. Pretty much every economist you speak to expected it to fade as we got deeper into the summer. And the big concern is we're seeing it fade now, and we're not seeing enough from Washington to offset the fiscal replacement for the income shock. And Tom, this is the story, and we keep going back to it. Bob Prince of Bridgewater talked about the duration mismatch. This pandemic in this episode is going to go on way into 2021. It will continue to weigh on growth. We will have an extended period of time below capacity. You need a Band-Aid from fiscal policymakers, and we keep doing it 3 months, 4 months, piecemeal. It's not enough.
We bring in now Lisa Abramowitz after her sabbatical. We're thrilled that she could rejoin us here on a Tuesday. We welcome Lisa back to Bloomberg Radio and Bloomberg Television worldwide. Lisa, you always see this first in the bond market. And while you were off on your sabbatical, there were some auctions. I never talk auctions, folks. Yeah. They were really nudgy, weren't they?
Well, people are looking to extend their maturities out for the next 20, 30 years. You're talking AT&T that sold $11 billion in order to push out some of the maturities of debt due in 2040. What I'm interested in, going back to the idea of the stimulus debate, you are going to get more targeted stimulus programs going forward around the world as Congress members, as policymakers lose the momentum, lose the sense of urgency. The question in my mind from an investing standpoint is how much does this lead to an increase in defaults in companies that have relied on the stimulus to stay afloat and will no longer be able to do so going forward? PIMCO expecting this to be the case, Tom.
I mean, it's going to be fascinating to see, folks, and we're going to do a lot of discussion on this. I'd look for David Weston with an important conversation, Balance of Power. Look for that at 12 noon, and then on to Kevin Cirilli with really timely conversations in Washington, 99.1 FM in Washington. Right now, let's jumpstart this discussion and do it through the prism of experience of Tobias Lefkovich at Citigroup. It helps. He was a sell-side analyst. He knows the granularity of the corporations and, of course, the bigger view at Citigroup on the stock market. Tobias, have you changed your view in the last number of days?
On the last number of days, we think the market, and we have thought the market was a bit ahead of itself in the sense that the expectations for powerful recovery on earnings without kind of bumps along the way, backed to some degree by, quote unquote, the Powell put. I listened to your prior conversation about the bond market, and the bond market's actually sending you two different messages. If all you did was look at the U.S. 10-year yield, you would say it is disbelieving, if you like, in the recovery. But if you were to look at the U.S. 10-year break-evens, they continue to move higher. So there is an expectation for something happening, at least on the pricing side.
Are you seeing that in the equity space? I mean, I'm looking at revenue shortfalls at 3M, revenue shortfalls at McDonald's. I mean, are you just baking that into your 2021 cake?
Yeah, we are. I mean, look, we're looking for earnings for this year in the 125 range and then 150 next year. Consensus for next year is 164. And a survey we did in late June of over 140 institutions suggested that 75% of them believe that 164 is too high. On the other hand, people are chasing momentum because they need to perform. So if certain stocks are carrying further, they're jumping in, even if they don't necessarily like it. But they feel they have to be, to quote New York Lotto, you got to be in it to win it.
Tobias, what do you think of the argument that because we've got narrow breadth, this is a fragile rally? Do you agree with that?
Not entirely. Look, there are some large cap tech names that are clearly leading the market in the sense that people wanted secular growth with bulletproof balance sheets and free cash flow generation, the kind of a defensive trade. But, for example, in the second quarter, 126 names in the S&P 500 beat the S&P 500 by more than 10 percentage points. So it's not like only 5 names did well and 121 did poorly. And I think that's kind of missed in the, what I would call the narrative out there.
Well, let's add to the narrative. Big tech earnings this Thursday. What's the Tobias Lefkovich guide at this point?
Look, I think people are looking for potentially some disappointment because the expectations are high. The work from home construct has generated some particular business trends that it really accelerated trends that were going before. So the idea of, online shopping versus in-store shopping has been a trend for a while, but we've probably moved it forward 2 years because of the pandemic. Telehealth, the same thing, cloud computing. All these things were already very much moving along. All we've really done is supercharge that speed.
Tobias, meantime, one of the big stories of the past week has been the weaker dollar, the dollar falling to the weakest according versus its competitor currencies since 2018. How does this factor into your equity strategy?
So it's actually quite important, Lisa. If I look at the budget deficits as percent of GDP, it's been pretty good lead indicator for many years now for the dollar, and it was suggesting dollar weakness already prior even to the pandemic. But I think as the pandemic occurred, people ran for the safety of the dollar. They ran for the safety of treasuries. The belief being, hey, this is the biggest economy in the world. We're going to have significant support systems of fiscal or monetary stimulus, and there's a place to hide. As you're starting to reopen the economy, and even with these kind of awful bumps in terms of outbreaks, it's unlikely we're going to shut down the economy the same way we did March, April, and May. Again, it's just too expensive from an economic perspective, too many job losses, and not to mention some of the social ills that come out of it in terms of mental health, domestic abuse, things like that. So it's unlikely you'll see that kind of shutdown. You may see sporadic ones or regionally focused ones, but not entire countries. And in that sense, you're looking at an environment where the dollar doesn't have to be at safe haven. When that pulls back, historically, emerging markets outperform the U.S. Historically, certain groups that are, even though they have large international sales like pharma or semiconductors, actually don't do as well with a weakening dollar. And then there are other ones that do particularly well, more commodity-oriented, energy, materials, et cetera. So there are, aspects to the dollar that are quite important.
So in other words, is this the playbook that you're going to, the idea that we're going to have a weaker dollar going forth that will continue to weaken, given the fact that, given the parameters that you just laid out, and that people should be going into emerging markets and staying away from the multinationals?
Not necessarily. Again, I said multinationals, again, take a look at semiconductors, take a look at pharma. They're multinational. They have large exposure to international sales, but they actually do poorly when the dollar weakens, and they do better when the dollar strengthens, which is not consistent with kind of the intuitive element of what it does. Think of it international sales. If the dollar weakens, you'll actually translate to higher revenues in the U.S. They don't trade that way. Again, everybody's entitled to their misperceptions, but we actually look at how the stocks trade.
Tobias, away from Fortress Corvette, your thoughts on the big banks?
Look, they're an area that investors have disliked for a while. Initially was the shape of the yield curve, concerns about credit loss provisions in kind of a bad economy, but they're willing to trade up some other cyclicals around that. So, we wonder if there's something even more disturbing in investors' mindsets. Maybe this acceleration I talked about in trends pushes more towards fintech. But I think the stocks themselves look very, very attractively valued right now in the banks. Again, if the world isn't as awful as everybody thinks, then the credit loss provisions have been over-provisioned. And there still is business activity out there. Either large corporations still need to borrow money. The credit card businesses, are generally doing well as people are buying things online using their cards, either debit or credit. So it's kind of hard to kind of get a sense that things are awful in banks. There is some concern, I believe, about the elections maybe. If the Democrats take the Senate as well as the White House, then maybe there'll be some more kind of bank bashing. But these are more speculation than anything kind of real at this point.
Hey, Tobias, great to catch up with you, sir. Tobias Lefkovich there of Citi, getting some headlines from Chuck Schumer, the Democrat Senator, Tom, saying the following: eviction protection is not part of the GOP relief plan. Remember, month end is not just the enhanced unemployment benefits that expire, it's also the eviction protection that expires as well. Chuck Schumer saying we're pretty far apart right now on stimulus talks. He's speaking to CBS at the moment, Tom, and that spread between Democrats and Republicans, is it about $2 trillion? Now, we've talked about the size issue. You can find an agreement on size, but if you're really battling over concepts and philosophical ideas at this point, Tom, it means we've got some hard work to do still.
Well, it's Tuesday. It's like Shared Values Tuesday, where they're all going to play off each other in the media. I'm really wondering, where are we 24 hours from now? Where are we a day and a half from now within the Fed meeting and all that?
Oh, Tom, I agree with you. It's the blame game. And you see it play out across the United States. You'll see the Democrats go to Democrat TV. You'll see the Republicans go to Republican TV, and they'll each blame each other. In the last bill, though, Tom, I was heavily critical of Democrats dragging their feet when we needed to go quickly, large and big, and worry about the details afterwards. In this moment, we have had months to calibrate the appropriate response to this and put the details together, and Republicans dragged their feet. And it does not look good down in Washington.
We're trying to do it like Brexit. We're trying to do it like the third.
Well, let me give you some serious advice, Tom. Take no hints, no clues, no ideas from the Brexit debate on how to formulate policy in Washington.
It's a joke, John.
I get it. It's just a serious moment, and it's ridiculous, Tom. And you know it is.
It is the election season. If I'm elected, free beer. That will
Is this good politics, Tom, for anyone?
Pardon?
Is this good politics right now for anyone in election season?
It gets your constituency up. Senator Cruz of Texas has a constituency. He's speaking to it.
Coming up on the program, Chris Kruger of Cowen Washington Research Group. That's next from New York this morning. Good morning. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. The battle is on over what the next coronavirus stimulus relief bill will look like. Senate Majority Leader Mitch McConnell unveiled the Republican proposal. House Speaker Nancy Pelosi called it pathetic, but said she'll try to find some common ground. The plan would reduce extra unemployment benefits and send a $1,200 payment to most Americans. The coronavirus is reaching a plateau in some of the hardest hit U.S. states. That's after health officials imposed unpopular measures like closing bars and requiring masks. Florida reported its fewest new cases in almost 3 weeks. Texas had its lowest total in 2 weeks. Now states wonder whether they can keep infection rates down until a vaccine arrives. China is buying American imports, but not enough to hit the terms of the two nations trade deal. That's according to Bloomberg calculations based on Chinese Customs Agency data. In the first half of the year, China had bought about 23% of the total purchase target for 2020. Purchases of farm products have stepped up the last 2 months. Nissan has issued an outlook for a bigger than expected loss for the fiscal year. The Japanese automaker expects to post $4.5 billion in operating losses. It also plans to skip its dividend. The impact from the coronavirus pandemic has forced Nissan to speed up cost cuts. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishika Gupta. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
When everything around us, including the way we work and live, has been interrupted, uninterrupted service is peace of mind. Juzi from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Been working on the strategic future of the company. We're long past the stockpiling phase now in North America, and what we're seeing is big shifts from category to category. So things like hand hygiene growing very quickly.
Europe does, as you say, have some catching up to do on that front. So we are expecting to see a little bit of strength coming through at the start of trade. How long will it last, though? The perennial question.
Senate Republicans have presented us with a half-hearted, half-baked legislative proposal. In short, the Republican plan is too little, too late. The Republican plan is weak tea when our problems need a much stronger brew.
Weak tea when we need a stronger brew. The words of U.S. Senate Minority Leader Chuck Schumer there down in Washington, D.C. That's where the focus is right now. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro from New York, 1 hour and 12 minutes away from the opening bell. Here's your price action this Tuesday morning. Equities shaping up as follows. We're down by 0.4% on the S&P 500. Yields come in a defensive posture, down a single basis point to 0.61%. Bit of dollar strength weighing on gold. Euro dollar back to 117.18, down a third of 1%. I have to say, though, Tom, no drama. The drama's down in Washington right now, some calm on Wall Street. The expectation still that this gets done. They settle their differences, and this was inevitable, that these two sides would clash at some point. We're seeing that play out big time this morning.
Well, it's a stimulus. It's going to be many trillions of dollars. There's no question about it. But there's going to also be a lot of detail. Chris Kruger is at Cowen, and he has a reputation for exquisite layout of the detail. He did that in June for Cowen of the many previous $1 trillion of stimulus. I'm sure he'll do it again in August. Chris Kruger joins us now. Chris, what is the detail you're most focused on as we stagger to some kind of agreement?
Yeah, well, good morning. Thanks for having me back. I mean, I think that the big question here, the crux of this Phase 4 bill, is going to be the expiring $600 weekly unemployment insurance payments, which ended this weekend. The House Democrats want to extend that for 6 months at $600. The Republican plan from last night would take that $600 down to $200 through September, and then basically kick it to the states for the states to figure out how to cap it at 70% of previous wages. I mean, I think there's no real surprise from the bid-ask where we are. The House Democrats put up over $3 trillion over 2 months ago, and I think it'll be one of the great political what-ifs, you know, why President Trump and the Republicans didn't sort of embrace a $3 trillion stimulus 2 months ago, whereas now we're steering off a fiscal cliff for over 20 million Americans and we're probably somewhere in the $1 trillion to $1.5 trillion ballpark.
Chris, from an economic perspective, let alone a political one, is there any argument that you believe in, that you think is legitimate, against having a $600 unemployment benefit continue, the enhanced unemployment benefit, continue for the next couple of months?
Well, the real pushback has been from a number of White House advisors and Senate Republicans. If you recall, Phase 3 in March almost fell apart over the $600 weekly supplemental. Various studies have shown that, you know, as much as five out of the 6 folks are getting effectively a raise from their previous salary from January. This is really, though, the key controversy with the bill. Republicans will get the liability shield. Democrats will get some chunk of money to go to states and municipalities. The $600 unemployment fiscal cliff is the real question.
Chris, is an interim bill at this point dead on arrival? Do you see any prospect for that down in Washington?
It could happen, right? Sort of the old saying is, whenever Washington finds itself on the edge of a fiscal cliff, they tend to build more land. So perhaps doing an extension of the $600 weekly payments maybe through September, that because you will have another cliff when the fiscal year begins on October 1, right? You'll have to pass some kind of bill to keep the government from shutting down. So maybe tying it to that, but that's going to come under intense pressure from you know, a number of fiscal hawks who have all of a sudden returned to Washington after 2 years of hibernation.
How does being a fiscal hawk poll in America at the moment, Chris, among some of these constituencies?
You know, I've like I said earlier, I think that you know, it's going to be one of the great political what ifs on that heroes package, over $3 trillion from that the House Democrats sponsored over and passed over 2 months ago. I think it's quite regional. You see, but candidly, the Senate Republicans who are most vocal on this are not running for re-election, right? They have staggered terms, so that maybe answers your question.
This is the question, and I want to sort of double down on what John was talking about, this idea of what political benefit is there to going against some sort of big fiscal stimulus. At this point, how is the idea of an ongoing enhanced unemployment benefit polling among Republicans?
I haven't seen specific polling relative to Republicans. I mean, there is a real belief among Senate Republicans, though, that this extension of the $600 is keeping the economy back, meaning that people would rather stay at home and collect the $600 on top of their state payments as opposed to going back into the workforce and looking for jobs.
Chris, what are you going to look for today in the next 24 hours in Washington? The whole cable media frenzy, the newspaper frenzy, et cetera. What is Chris Krueger most focused on?
Well, I mean, it is a bit of a crazed week here. I mean, you have the ongoing funeral of the late John Lewis. You have the big tech hearing tomorrow. You obviously have the Fed as well. So I don't expect much on Phase 4 today. The primary negotiators, though, are pretty much the same from Phase 3, with the exception of now Mark Meadows, the White House Chief of Staff, is sort of a co-head along with the Treasury Secretary. But then it's, you know, the actors we've seen before: McConnell, Pelosi, Schumer. So, you know, at some point, I suspect we will have a meeting at the White House, which will probably predictably, you know, go sideways. I think, as you know, you want to keep those 5 folks in a room. I think injecting the president into these talks, you know, we've seen that the last couple times, and it inevitably, you know, causes a negative tape bomb. That also could be a positive, right? That's sort of how the sausage is made here. So we'll see it unfold. This, I would say, though, that this has a lack of urgency that the previous negotiations had, and I think some of that is because, you know, we're not opening limit down every morning anymore.
We need the market to do the hard work. It's depressing. Chris, thank you, sir. Chris Kruger, Cowen Washington Research Group Managing Director. And Tom, it's depressing because it's kind of true.
Gloomy.
It's just pathetic. It's absolutely pathetic. Tom, the only thing holding this labour market back right now is the pandemic. If you and I wanted to go for a meal on Friday night, like we used to, go inside a restaurant with the air conditioning, guess what? We can't. It's the virus holding back the labour market, not the $600 enhanced unemployment benefits. I get the philosophical argument, but when the economy's still constrained, when large parts of it are still restricted from reopening, Tom, that's not the enhanced unemployment benefits, that's the pandemic, Tom.
But we'll see. I mean, the question is, what's the unemployment rate? August 7th, the jobs report.
Equity futures down 13, off by 0.4%. Coming up, Laura Rain, FS Investments chief economist from New York. This is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
The national security bill was passed by Chinese lawmakers. The Hong Kong police force has already acted in accordance with the new law.
It's a very disturbing development.
This is, in effect, an attempt to end one country, two systems.
The central government is telling us just stay out of politics.
From New York City, this is Bloomberg Surveillance for our audience worldwide. We're live on Bloomberg TV and radio alongside Tom Keene and Lisa Bravitz. I'm Jonathan Ferro. 1 hour away from the cash open this Tuesday morning. Here's your price action, shaping up as follows this Tuesday, with equity futures bouncing off the lows, still down around about 12 points, off by 0.4%. We've seen some euro strength, a lot of it over the last couple of weeks, through much of this month as well. Some weakness this morning, euro dollar back to 117.22. We head south on treasury yields by just a single basis point. 0.6% is your yield on a 10-year. And with that dollar strength, Tom, some gold weakness, gold lower by 0.6% to 1930. Tom, you mentioned that payrolls report. I wonder how many people realize that that payrolls report comes just as Congress breaks up for recess. Yeah. Once again.
You wonder if there'll be a vote there, or if they're smart and get the vote, get it out of the way earlier. My basic take is, John, they'll probably delay it right up to the end, August 6, 7, 8 as well. Laura Rame knows that. She's with FS Investments, our chief economist, and we're going to recalibrate off of a really strong note of a day ago. This is on lift off. Do we see a Q3 lift off? Laura, give us an update right now. Do you see a Q3 lift off?
So I think, we've achieved liftoff. The real problem is traction, and that's what we've lost in July. I think we all knew in our sort of somewhere that the pandemic could cause reopening and reactivation of the economy to be sort of 2 steps forward, 1 step back, but we're actually seeing it now, and it's painful.
Well, we talked to Charles Plosser earlier. You know him from Philadelphia. Now we're talking to someone smarter in Philadelphia than Charles Plosser. He looked for inflation. It didn't happen. Are we going to have this staggering 2020 into 2021 with uncommonly low inflation?
Yes, there is no doubt that this is a big deflationary pulse hitting the economy right now. And I think, we've got the Fed, a lot of people focused on the Fed this week. I think really the big news.
Bit of a connection problem there with Lara Rame there of FS Investments, our chief economist there. Lara, just hold on a second if you can as we try and re-establish that. Tom, I think what Lara's talking about is really important with the inflation backdrop ahead of the Fed. The Fed is widely considered to formalize an approach that has been shaping up for the last 12 months or so, that their tolerance for higher inflation is a whole lot higher. Now, do they formalize that with an average inflation target, which effectively would lift the overall inflation target? And is that why we're starting to see inflation expectations pick up? And is that also playing a role in the big move we've seen in the gold price over the last couple of weeks?
I think it's a soup, John, and I would go to J.P. Morgan's note of the weekend. I thought Michael Ferroli and the team was brilliant about everyone out there. There's no theory here, John. Everyone has to see the high frequency and the less than high frequency data. We're starving for data, as Ms. Rahm was talking about there. We're starving for discovery of what this unique economy looks like.
Let's head back to Lara now. I think we've re-established that connection. Lara, forgive me for doing that. Let's continue the conversation ahead of that Wednesday Federal Reserve decision. The tolerance for higher inflation. Do you expect that to be formalized this week or in September?
No. In September is when it'll be formalized. I think, the Fed is clearly laying the groundwork for keeping interest rates low for a long time. You and I will hopefully be here in 2 years talking about interest rates that are still at historic lows. What really I think when we were talking about inflation, this review of the framework is important simply because they're trying to integrate framework for inflation credibility when we're facing a huge deflationary impulse. And I think that's where they're trying to just cling to this credibility and cement that credibility at a time when we're really facing the opposite problem.
Lara, we're just going to wrap up the conversation. I think we've got a bit of a problem with your connection there. Lara Rame, FS Investments Chief Economist. Tom Keene, looking ahead to all of this on Wednesday. It is going to be the conversation in the news conference with Chairman Powell as well. The next moves on forward guidance. And Lara is not alone. Pretty much every single economist you speak to on Wall Street right now thinks this meeting is too early to make any announcements on forward guidance and any big moves.
Totally agree. And John, it is about a lack of data. I can think, in the umpteen years we've been doing this, the dearth of data right now, we need fresh data to tell us what's going on out there. What I see out there is the anecdotal stuff from people on the ground. I mean, Lisa, jump in here. Kathy Hochul, the lieutenant governor, I thought was great. They're not talking 9 or 10% unemployment, Lisa. They're talking tangible, high double-digit unemployment.
It's catastrophic, and you go state by state, city by city. I mean, we're in Midtown right now. You look around, there are empty office towers all over the place. There was a big story in the New York Times about what will happen to the entire economic ecosystem of some of these cities. Well, with the unemployment rate, you talk about a deflationary shock on so many levels. How do you offset that, and where does the Fed fit in?
This is one of the great unifying features, John Farrow, in that the same thing's happening in England. The focus of the Prime Minister on trying to rekindle the city economies of the United Kingdom is no different here.
But Lisa's point on city stance, and it's really important. Many people reflect on this as the great acceleration. I think McKinsey put out a piece of research on that recently. Tom, it's not about how the pandemic has changed the direction of travel. It's about how it's accelerated it. How many people do we all know that only want to come in the office once, twice, maybe never a week? Loads and loads of people, and now all of a sudden we're making that transition. And the management teams, worldwide for that matter, that have held out from allowing people to do that, they've now been forced into making that decision. And it's going to be difficult to get those people to come back 5 times a week. And to Lisa's point on the city economy, it's going to completely transform it. We've already seen this happen with tower blocks here in the United States, in Midtown Manhattan, where they've already got to cut the rents, Tom. The rents were at a premium because people wanted to live close to the office. Now, guess what? They don't have to.
And this, frankly, goes to the Schumer headline of 20 minutes ago. He's pointing out the eviction debate, and that the eviction debate and the lack of rent, folks, redounds right back in to the landlord debate. And there's been some discussion of that, John. To be honest, there has been a discussion about the collapse of real estate and how that sequences. To me, John, the major thing here is the calendar and stimulus, yes, but the real calendar is there was March, and we were focused on May, and then there was
May. Then it became
May.
August.
Where are we focused on now?
The companies aren't waiting. You saw Google make their announcement, Tom. 2021. See you in the summer, guys. Don't come back until then.
We're not out a couple months. I don't see that, except maybe the Red Sox are out a couple months trying to get ready,
Well, you're looking ahead to 2022, where the Red Sox get it together again. Lisa, on this whole situation, with the getting back to work and the things not getting back to normal, what we've witnessed over the last couple of months, particularly the last several weeks, is companies start to make permanent, long-term decisions. And we've talked about these 2 phases in a crisis. Phase 1 is survival. Phase 2 is when you look around and we use that ugly word right size, and you make long-term, permanent decisions. And we've started to see them pile up over the last couple of weeks. There is a permanency to this now. And for a long time, I think too long, we consider this a temporary event. It's going to take a while to get out of this mess.
A lot of people this week are looking at the Federal Reserve. They're looking at the stimulus package. I'm watching the jobless claims numbers on Thursday because there is a big question here about whether we may see a negative number for the jobs data for the month of July. And this is what Betsy Stevenson of University of Michigan was saying last week. She's actually expecting us to have a net loss of jobs in July due to both the resurgence of the virus, the reshuttering of some of these businesses, like in the tourist industries and like in the restaurants and retailers, but also the permanent changes that we're seeing, John.
Let's bring in Mike McKee, shall we, and talk about this jobs report that comes up in August. Mike, I think this jobs report has to be the most unpredictable payrolls report in quite a while. What are you reading at the moment?
Well, the latest data suggests that we are going to see some sort of job losses because not only do we see the jobless claims numbers rising, but the Census Bureau has been conducting a sort of contemporaneous survey of the labor market, and it has shown significant job losses over the last couple of weeks. We're also seeing slowdowns in many of the other alternative indicators that we watch, so it does appear the economy has stalled, and that would suggest some sort of job losses. Now, the Fed knows this. They're following all the same data, so I'm not sure it's going to have a major impact on them these 2 days, but it certainly would land with a thud down in Washington.
Before that, we have a Fed meeting. Michael McKee, what's the mystery of the press conference this time around? It's always entertaining. There's 4 or 5 of you that ask really informed questions. What's the thrust, the angle you're looking for this time around?
Well, a couple of things. We don't expect the Fed to change any policy, but they might hint that they're going to. There is a feeling that they're going to do something in the area of forward guidance, either at this meeting or in September. So Jay Powell and the Fed may come out and say we're going to tie it to a state dependent as opposed to a date dependent. In other words, where the economy is or either where unemployment or inflation is before they would raise rates. The only question is when they would announce that, and if he's going to hint at it on Wednesday, or whether they're going to actually come out and say something. But no policy change for a long time. And the other aspect is, I'm sure he will be asked, what happens if they don't come up with a deal down in Washington? What happens to the economy? And we'll see how strong he wants to be on that.
Mike, another question as we talk about the permanent job losses is how much salaries are actually going down as people cut wages in addition to cutting staff. How much are we actually seeing that?
Well, we saw a lot of it when people lost their jobs, particularly at the lower end, and that's where the real impact has been. The people who make the least are the ones who are hurting the most. Those who, at this point, are able to work from home or have gone back into the office have pretty much maintained their salaries. There's a theory that over the longer run, if you're working from home, maybe they don't have to pay you as much, particularly if you're working from a remote home. And we all know people in this business who are working out in the Hamptons or
Mike, don't say this too loudly. What are you up to?
Up in northern New York. So that might change over the longer run, but that's a more socio-economic study than anything else. At this point, it's really how do you get money to the people who really need it at the bottom end, who've lost either all their income or seen their hours cut way back.
Michael McKee, always great to catch up with you, sir. Looking forward to that payrolls report coming up in a couple of weeks' time. I'll repeat what I said. I think it is so unpredictable, given what we're seeing in this market, given the amount of churn underneath the headline numbers in the labor market. Really, really difficult one to call. I'm
going to go to high-frequency data. Maybe it's never been more important than it is now. And you saw claims reverse last Thursday, John, and to see that, 1 week out, 2 weeks out, you get to a 4-week moving average of a stable or even rising claims. No one's really priced that in.
Let's give you a feel of the price action this Tuesday morning. Good morning to you all worldwide. Equity futures are lower by 11 points, off by 1/3 of 1% on the S&P 500. That bid picks up in the Treasury market. Yields head south by 2 basis points, 0.6%. Is your US 10-year after that huge explosive move in a gold price. We're on the back foot just a little bit, down 0.4 of 1%. No drama. Gold lower as the dollar strengthens. Euro dollar back to 117.32. From New York City, up next on the FX market, Adam Cole of RBC. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Senate Majority Leader Mitch McConnell has had to do more than battle Democrats over his new coronavirus relief proposal. A number of fellow Republicans also are opposed to the $1 trillion measure. It calls for reducing those enhanced unemployment benefits and sending $1,200 checks to most Americans. House Speaker Nancy Pelosi calls the Republican plan pathetic. Still, she says she'll try to find common ground. It's likely to be a combative hearing when Attorney General William Barr testifies today before the Democratic-controlled House Judiciary Committee. In a prepared statement, Barr says the president has not tried to interfere in Justice Department business. He'll also argue that the president was the victim of wrongdoing by the Obama administration and by anti-Trump forces on the FBI. It's an unusual restriction for a presidential campaign. Joe Biden's staff has been forbidden from trading individual stocks without approval from the campaign's general counsel. That's according to an email obtained by Bloomberg News. The policy is designed to prevent trading on non-public information. New York State health officials will investigate a Hamptons charity concert that was opened by Goldman Sachs CEO David Solomon. Solomon performed as a DJ. Governor Andrew Cuomo says he was appalled by what he called egregious social distancing violations seen in videos of the event. President Donald Trump is playing a game of defense in areas a Republican incumbent should be able to count on. He's spending nearly all of his advertising money to keep states he won in 2016. More than 92% of his state-based spending in the month of July went to those once friendly states. Joe Biden is hoping to flip some of them to the Democratic side. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Some things you see coming. Some things you don't. The trick is to be ready for anything. Pablo from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Fees that retailers had to pay to be able to enter the markets, the democratization of the markets by allowing them to have direct access to the markets over the last 10 to 20 years has really been, a key trend that has driven, I would say, the U.S. markets.
Right now, there's a collapse in business investment. Not only is that bad today, but it sets this tone for going on into the future. If you have a continued business collapse in investment, you're never going to get employment back up to where we were pre-COVID.
Catherine Mann there of Citi, the global chief economist, weighing in on this economy. Tom Keene, the interview of the moment coming up a little bit later in the next hour on Bloomberg TV. Really looking forward to catching up with Libby Cantrell, PIMCO Public Policy Head, on Bloomberg TV with the countdown to the Open. Just around about 12 minutes away, Tom.
Probably have some good quotes there already from the politicians. Senator Schumer out, and I'm sure many others, including Republicans, will be commenting on the damage done last night, and then the story moving forward here into Tuesday, Wednesday, and Thursday. Part of that is the global litmus paper of the system. Adam Cole at RBC Capital Markets, a European head of currency strategy, writes a hyper-detailed note on many, many currencies. We get a nice overview from Mr. Cole. Adam, let's start with the U.S. dollar. I get the idea that it's technically breaking down, but boy, is there a pitched battle about dollar resiliency or finally tradable dollar weakness? Which is it?
So if you looked at our expectations in dollar index terms, DXY terms, then the dollar goes down. But I would hesitate at characterizing that as a tremendously dollar bearish call on our part. It's really a reflection of the fact that you've got a series of idiosyncratic stories in other currencies that are pushing them up, most specifically the yen, to a lesser degree the euro. And the dollar is kind of losing by default on the other side of that. Not that we have a particular concern on the policy outlook in the US. We're less worried about imbalances in the US than we are in some other economies. So it's the dollar almost losing as a default position on the side of a couple of relative strength stories.
We've got to revisit your yen call. Very, very strong yen. Give us a target there from this new 106, 105 level, and give us the why the yen strengthens.
So I've got dollar yen at 95 at the end of the year, which is the biggest FX move that we have in our kind of deck of forecasts. And what that reflects is that dollar yen has really been a range-bound story for the last 4 months. And what I think you've seen is domestic investors in Japan are selling dollar yen, and investors outside Japan are buying dollar yen because it trades as a risk proxy and markets are generally being risk on. The flow that I think endures going forwards is the domestic flow from within Japan, where investors are increasingly putting hedges onto their foreign investment positions because it costs them almost nothing to do that with interest rates as converged as they are. That flow endures. When you get those kind of shifts in hedging behavior in Japan, they tend to go on for several quarters and they tend to persist. The flow on the part of investors outside Japan is much more fleeting. So as we kind of break out of that range, as we appear to be doing now, the flow I think that endures is the persistent selling from within Japan, and the more fleeting flow from outside Japan retreats into the background. So as I say, my boldest call from here is dollar yen trades down to 95 at the end of the year.
Wow, that would be a huge move. And I love hearing you talk about this because you get the push-pull right now of the dynamics in the market underpinning the weaker dollar. And there's a question here. Is this due to that risk-on type of bet that you were talking about, or is this due to a structural change in the United States with a higher deficit, a more dovish Federal Reserve, and even lower, even more negative real rates? Which is it of the two?
It's the former, in my view. So if you look at the dollar versus the riskier currencies, so the commodity currencies and the less liquid G10 currencies, emerging market currencies, then the dollar does tend to lose when markets go risk on, as they generally have been recently. If you look at the dollar more broadly, so incorporating Eurodollar, for instance, doesn't have much direction to general risk appetite, and dollar yen typically tends to work the other way. And the dollar's principal losses are growth-dependent currencies. So for me, it's primarily the dollar losing against the currencies against which it trades as a safe haven. The U.S. deficits are clearly an issue, but not uniquely a U.S. issue, of course. There are other economies that have bigger issues in deficit financing than the U.S., not least because the U.S. has, on the other side of its government deficit, a substantial excess of private savings that it can draw down. Other economies are not in such a comfortable position. So the deficits are an issue everywhere, but arguably they're not an overarching issue in the U.S. in the way they are in some other economies.
Adam, you have a pretty bold call when it comes to the yen. What about with the euro with respect to the dollar?
So our bias is that the euro goes higher, and the dynamic is similar to the yen, though much more, the flow is much less compelling in its size, in that the compression of interest rate spreads in the first half of the year changes the behavior of European investors. And let's not forget that Europe has the best part of a decade in current account surplus now, so it has a sizable stock of foreign assets. And that will generate euro positive flow. It's not as compelling a story as it is in the yen, but our bias is that the euro dollar drifts a little higher from here.
Adam Cole, thank you so much. Greatly appreciate it. With RBC Capital Markets, we're going to have to leave it there with the hour moving into where we're heading. Where we're heading is with John Farrow. And, of course, the Open on Bloomberg Television. I'll be with Paul Sweeney on Bloomberg Radio. Lots to talk about, really centered around this nascent discussion between Republicans and Democrats in Washington over phase 4 or 5, or at least is it 6 of
Yeah, well, it will be, right? I mean, I guess that's what we're heading toward, is round after round. And the idea that the Republicans broke it up into many different bills so they can negotiate different pieces of it gives you a sense of just how much disagreement there is within the Republican Party itself, Tom.
Well, it's a document. You know, I don't know if anybody actually reads the document. Maybe Kevin Cirilli's the only one in Washington who does read it. But there it is, subject to amendment, as they say. Lisa, what do you see in the bond market? I see a bond market, full faith and credit, is actually pretty stable today.
One thing I find interesting, and you touched on this earlier, the idea that AT&T sold $11 billion of debt yesterday, trying to push out their maturities for decades to come. Yeah. That's what a lot of the big companies are doing. And if you take a look at the amount of corporate debt maturing in 15 or more years, that has almost doubled in the past 5 years to near more than $2 trillion, with yields going to record lows. Why not? If you have the capability as a big company to push out your maturities for another 2 decades at record low borrowing costs, why not do it, right? And they all are.
And then you get, Lisa, I'm bringing up the Apple paper here right now, folks. You can do this on a Bloomberg really actually pretty easily. And I can scroll through and look for that Apple piece of a year and a half ago that was issued in Swiss francs.
Yeah.
So then, you're down to almost, I don't think it was a negative yield, but it's right there as well. Of course, the testimony of Mr. Cook and technology. Look for that. I believe that's tomorrow in Washington. Incredible Washington calendar. One of the themes of our David Weston with Professor Summers of Harvard University, the former Treasury Secretary. They'll have a few things to speak about. Futures at -11. Stay with us. This is Bloomberg Radio, Bloomberg Television.
Some things you see coming, some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
From New York City for our viewers worldwide, good morning, good morning. The countdown to the open starts right now with 30 minutes until the opening bell this morning. Good morning. Equity futures down 8 on the S&P 500. We begin with the big issue. Republican leadership unveiling a $1 trillion stimulus plan widely considered to be dead on arrival, looking to negotiate with themselves and Democrats simultaneously. Senate Majority Leader Mitch McConnell making his move.
So we have 1 foot in the pandemic and 1 foot in the recovery. The American people need more help. They need it to be comprehensive, and they need it to be carefully tailored to this crossroads. That is what this Senate majority has assembled.
Well, as for that Senate majority, we're already seeing signs of a fractured majority. Republican Senator Ted Cruz telling reporters there is significant resistance to yet another $1 trillion. As it stands now, I think you'll see a number of Republicans in opposition to this bill. With time running out, Senate Minority Leader Chuck Schumer delivering a harsh assessment of the proposal.
The greatest crisis America has faced in close to a century on health, 75 years on economy, and our Republican colleagues can't even agree among themselves about what to do. The Republican plan is too little, too late.
Heading down to Washington, D.C. now, let's catch up with Kevin Cirilli, our chief Washington correspondent. Kevin, is there a path to a deal this week?
Yes, maybe not this week in terms of Friday running out for the deadline for unemployment benefits, but ultimately this was the opening bid. We were predicting that there would be a high-stakes political theater. That's exactly what we got yesterday from Leader McConnell and Minority Leader Schumer. But it's the opening bid. Now they've got to negotiate. I'm told by sources up on Capitol Hill, Jonathan, that those negotiations will begin in earnest today, and they will continue round the clock between now and Friday. Speaker Pelosi, for her part, having to not only negotiate with Republicans, but also members of the far left in her party who feel emboldened. This, as former Vice President Joe Biden, now the presumptive Democratic nominee, continues to unveil his economic pitch. So there's different narratives that have emerged on the left and on the right. I do want to note that yesterday that I spoke with a senior Republican strategist who told me that upwards of around 20 Republican senators could ultimately vote against this bill. That coupled with the notion that President Trump having to really continue to try to get Republicans on board to pass another expensive round of stimulus, which candidly will likely be above $1 trillion when all this is done.
Kevin, who are those Republicans? We've heard from Senator Graham, Senator Ted Cruz, who have both said that Republicans will be saying no to this, but they haven't said which Republicans will be saying no to this. Which Republicans are we paying attention to now?
Well, look no further than Leader McConnell's backyard, because the junior senator from Kentucky, Rand Paul, has also emerged as someone who has said that this is just too much money to be spent in terms of the economic recovery. Yesterday, I spoke with Congressman Max Rose, a Democrat from New York, representing more of the working class area of New York City. And what he had to say was that this was a dead-on-arrival type of plan. But the reality in New York City and Los Angeles is very different, Jonathan, than the reality of Rand Paul's Kentucky. And that's why you're seeing such divisiveness erupt into the public discourse surrounding this issue.
We expected the tension, and here it is. The negotiations really do begin. Kevin Cirilli down in Washington, D.C., thank you. Joining us now, I'm pleased to say, Libby Cantrell, PIMCO Head of Public Policy. Libby, fantastic to catch up with you. Do what you do best. Drain the drama from this situation and tell us why we have a path to a deal before recess.
Yeah, well, good morning, John. Lovely to be with you. Yeah, so I completely agree with what Kevin just said. This is sort of the opening bid, the opening salvo, if you will. And as you mentioned, this is $1 trillion bill, so very likely just to increase from here once the Democrats get their fingerprints on this bill. There were several things that were not included in Senator McConnell's sort of opening bid that are very important to Democrats. So expect those to be pretty contentious sources of negotiations. One, very importantly for the Democratic conference and some Republicans even, is funding for state and cities. So expect the Democrats to really push on that. But when all is said and done, the political incentive here is to get something done. The White House wants to get something done by the congressional recess, which starts on August 7th. Democrats certainly do. And then importantly, vulnerable Republicans who are running for re-election in November likely want to get something done as well. They will be those Republicans who vote for this. Just remember that in order for this to pass the Senate, anything to pass the Senate, you usually need 60 votes, which means that if you have all 47 Democrats vote for this, you just then need 13 Republicans to vote in support. So while you should expect some dissent from the Rand Pauls and the Ted Cruzes who might want to be running for president someday, so they believe it's in their own political incentive to vote against this, you will likely get enough support from Republicans to see something pass. So bottom line here is we expect another bill to be passed probably by the end of August recess and probably in the scope of $1.5 trillion plus.
Libby, where do you see scope for compromise at this point?
Well, I think that there's some things that were included in the Republican bill that I think Democrats will likely, actually support. There is some support for small businesses. There's support to retain some workers. There's also, an opening bid on unemployment insurance. That is a huge priority for Democrats. This bill now reduces that $600 benefit a week to only $200. That is sort of a non-starter with Democrats, but expect that to increase. So I think there's enough in this bill for Democrats to work with. But again, we should just view this as sort of the opening bid, the first iteration, and probably what's going to be a pretty iterative process over the next 2 weeks with headline risk.
Libby, plenty of headline risk, there always is, but on that 70% wage negotiation, I just wonder, is it even workable? Can you execute that as a plan, even if it's agreed?
Yeah, John, and I mean, who knows? I suspect we won't see that in the final bill, only because I think with the feedback that Republicans are getting from many of their own states that they represent is this is just not viable. Their bill does give a runway to sort of implementing that formula to October. They also give some additional money to states to improve their unemployment insurance infrastructure. But I think at the end of the day, there's a reason why they did a flat benefit in the CARES Act, and that's just because it's simple and you can actually get money into people's hands and voters' hands, right? That's a key dynamic here, that going into the election, vulnerable Republicans, Democrats, President Trump want people to actually get money into their pockets. And this sort of formula, I think, would make it more difficult to achieve that.
Well, Libby, you said it. 98 days out from an election, one person that's vulnerable is the president in the White House. Do you expect him to step up and step in this week? How do you expect him to assert himself as he sees this mess play out in Washington?
Yeah, I think like before, he will delegate this to Secretary Mnuchin of the Treasury, of course. Mnuchin has been, sort of the moderator, the mediator, if you will, both between Republicans and Democrats, but also between Congress and the White House. And I think we should expect the Secretary to play that role once again, in a role that he actually plays quite well. You could see President Trump asserting himself, but I do think he trusts Mnuchin on this and will probably delegate at least most of the backroom dealing to his Secretary of Treasury.
Libby, when we talk about the polls ahead of November, if you speak to Republicans, they'll say, yeah, we've seen this movie before back in 2016, and look how it ended. Can you walk me through the differences and the parallels between now, the polling we're seeing at the moment, and the polling back then?
Yeah, well, I mean, I think we can't say anything definitive, right? So I think that 2016 certainly humbled the entire sort of political punditry industry. But as of now, there are some key differences that I think are just, important for folks to keep in mind. One is just the durability of former Vice President's lead. He has been leading President Trump outside of the margin of error since the beginning of 2020. And since May, he's been leading by more than 7 points. Hillary Clinton only led Trump by 7 points for only 2 days in the summer of 2016. I also think, polling is not going to be perfect, and so we should not expect it to be. However, there have been some polling changes that have been made since 2016. For instance, pollsters are saying that they are weighing sort of education levels more. And that was a big issue back in 2016 when some of the non-college educated voters did break for Trump, and they didn't feel like they were represented in the sort of the polling sampling. So there are some differences here, but again, I think, as you say, we're 98 days out. There's a lot can change. One thing, though, that is important, I think, for folks to remember is that early voting happens in many states in the middle of September. So this is really the most critical kind of 6-week stretch, if you will. And yet another reason why we think that the political incentives to get something done before the August recess on the fiscal stimulus side are supportive.
Libby, tremendous to catch up with you. As always, send our best to the team at PIMCO, won't you? Libby Cantrell there on the path forward down in Washington. Coming up on this program, focus turning to Chairman Jay Powell, with Fed officials kicking off their 2-day policy meeting. Weighing in, looking forward to this one, Peter Cecchini, Alpha Omega Advisors founder and CEO. He joins us next, 20 minutes away from the opening bell. Equity futures down 10. We're up a third of 1%. From New York City this morning, good morning. You're watching Bloomberg TV.
I'm placing a new order to sell short euro at 117.28. Order placed to sell short at 117.28.
When opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it'll take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacqua.
Position opened at Euro USD, short position 117.28.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The Boston Symphony Orchestra presents BSO at Home, a collection of concerts, at-home lessons, and behind-the-scenes stories to enjoy while you stay at home. Learn more at bso.org/at-home.
The end of 60-40 means the end of treasury bonds as a place to go for that kind of hedge. Our view is that the long bond is dead money. And so if you need something that's going to be differently correlated from equities, gold's the best candidate here. From a real rates point of view, central bank policy, the outlook for inflation, all favor gold.
Bank of America's Jared Woodard there, making the case for buying gold. He's not alone. Goldman Sachs joining a growing list of forecasters saying the rally isn't over. Goldman boosting its target on bullion, writing the following: with more downside expected in US real interest rates, we are once again reiterating our long gold recommendation from March and raising our 12-month forecast to 2,300 an ounce from 2,000 previously. Michael McKee, Bloomberg International economics and policy correspondent, joins us right now. It's all part of the same trade, Mike. Real yields lower, dollar weaker, gold higher. It's dominated the price action of the last month. And at the epicenter for many, Mike, is a Federal Reserve that meets today, and that meeting concludes tomorrow.
Yeah, that meeting is probably not going to make any changes in the thirst for gold at this point, but it may come. We have to keep a close eye on that. Gold pausing its ascent this morning as that Fed meeting gets underway, but it's been quite a run-up for the precious metal. No surprise, of course, the U.S. has fumbled the pandemic, and with the weakness in the economy, we've seen real yields push lower. That weighs on the dollar, and no surprise, as the dollar goes down, gold is going up. Where does it go from here? Well, JP Morgan, Chase, Citi, and UBS think it's pretty much at its peak. However, you look at Goldman Sachs, they've got that $2,300 call. Look at Bank of America, $3,000, they think. Goldman Sachs also with a bold call this morning saying they worry the U.S. has run up its debt so far in fighting the pandemic that at some point when the economy has recovered, the Fed is going to let inflation run too hot and debase the currency, and that would reduce the debt burden for the United States, but it certainly would hurt the dollar. You know what? That just might happen in the sense that the Fed, not losing reserve status, that's been predicted so many times, but the Fed has been telling us they're probably going to switch their forward guidance to a state-related case, something along the lines of inflation dependency, getting it over 2%. Probably not at this meeting, but maybe in September. Interest rates stay near zero, and that lets inflation run a little bit hot. Then the question is, can the Fed bring down inflation when it gets that high without slamming on the brakes? And there's your question if you want to invest in gold for the bit longer term. Perhaps they might hope so. Let me show you one more chart, though, for gold investors. You can't take gold into a store and buy something. You got to convert it into dollars, and inflation does affect that. Adjust for inflation, and gold is not anywhere near its high price for the history of the metal in 2000 and in 1980 and 2011. Certainly buys less than it used to, John. So you got to keep that in mind when you think of gold as an inflation hedge at this point. Doesn't always work.
Michael McKee on gold, ahead of that Fed decision coming up tomorrow. Mike, thank you. Peter Cicchini of Alpha Omega saying gold remains his #1 conviction trade, writing the following: gold is a dollar store of value without a contra liability in the form of treasuries, especially near the zero bound. Low rates may lose their real world stimulative efficacy. Peter joins us right now. Peter, fantastic to catch up with you, sir. Walk me through your gold conviction, because it's a whole lot more nuanced than what I've heard from many people in the last couple of weeks, Peter.
Right, great to see you, John. Yes, gold has actually historically worked very well in both disinflationary and in inflationary environments. And that's seemingly difficult to reconcile until you sort of come to this idea that in both cases, both when there's inflation as well as disinflation or deflation, gold is serving as a treasury substitute. So now, for example, in this somewhat disinflationary environment, gold is attractive because relative to the low rates we're seeing in the treasury market, as a store of dollar value on an opportunity cost basis, it actually is much more favorable to own gold versus treasuries than it has been in a long time. And moreover, and I think very importantly, when rates are this low, there's a lot of convexity risk to owning treasuries. That is, if rates rise, the value of your treasury holdings can fall much more quickly when rates are low. So therefore, gold is attractive, even though inflation has not been hot.
So, Peter, this is an important point that you're making, and Jared Woodard of Bank of America touched on it. It's the proposition that the traditional 60-40 portfolio construction method, the 40 component, is changing somewhat, and there's a shift from treasuries to something like gold. Is that something you see increasingly gaining momentum in the months to come, Peter?
Well, I do. And again, there's another piece of this, which I alluded to in the note that I wrote on gold, which is this absence of a contra liability in the form of treasuries also is part and parcel of the fact that we're running massive deficits right now to fight this pandemic. And the Fed is being forced to monetize those deficits and really is no longer in a role to be stimulative. It's really palliative in this monetization function that it's seeing. And those deficits are going